have collapsed. That affects food security. That affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your green in brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So, for example, we are seeing earlier this year the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube size concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, eConcrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing eConcrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
eConcrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. eConcrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, eConcrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are surging as debt and energy worries ease. The Dow, the S&P, and NASDAQ all very close to session highs. Right to the numbers with the S&P up 56, up now by 1.3%. The Dow's up 468, up 1.4%. NASDAQ up 231, up 1.6%. 10-year down 13 seconds. 10-year yield 1.56%. Spot gold down 4.80 the ounce. Right now at 17.57, a drop of 0.3%. Bitcoin is down 1.3% to 54,206. Crude, West Texas Intermediate up 1%, 78.22 a barrel. Natural gas down 0.5%, 565 per million BTUs. Oil rebounded after the Energy Department said it has no plans to tap the nation's reserves at this time. Yesterday, Russian President Vladimir Putin offered to ease Europe's natural gas prices. Amrita Sen is chief oil analyst at Energy Aspects.
The key to remember is that the Biden administration is very, very keen to have low gasoline prices for consumers. So we should always keep that in mind. And if prices continue to go up and overheat, then yes, they will be putting more pressure on OPEC. And yes, then SPR can become a tool. With regards to gas and what Putin said, the reality is that Russian gas inventories are low. Even if they wanted to increase exports, they have to refill inventories themselves. And that's why European gas prices are so high.
Amrita Sen at Energy Aspects. SPR, by the way, shorthand for Strategic Petroleum Reserve. IBM says all of its U.S.-based employees must be vaccinated by December 8th or put on unpaid suspension. IBM down now by 0.1%. American Airlines telling its employees to get fully vaccinated by November 24th or lose your job. American Airlines down 1.8%. S&P up now by 1.3%, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio, streaming on YouTube. It is Thursday, October 7, 2021. Stocks, they're up again, Tim.
This could shape up to be the best three-day gain in months. It's wild, right?
The perspectives. It's really kind of funny, right? The back and forth that we're seeing. We're going to talk about the reasons why, some of the news out of D.C., and also maybe some easing when it comes to the energy crunch. We're going to talk about that. We're going to talk about Tether, the crypto world's $69 billion mystery.
You cannot make this up. It involves characters from the Mighty Ducks, a retired plastic surgeon, and $69 billion.
Yeah. The truth. That's what it's all about. We're also going to talk with the former Unilever CEO, Paul Pullman. He's got a new book out. Harvard Business School, they write that he saved Unilever, and now he's trying to save capitalism. So we'll talk to him about lots of stuff.
Well, speaking of capitalism, we are talking Squid Game and why it's not necessarily a fit for Disney and fits well on Netflix. And also, in just a few minutes, we're going to talk to the CEO of Levi Strauss & Company.
That stock is on a tear today. All right, first up, let's get to the Market Drivers Report. And let's set that Business Week agenda on this Thursday. And in the house, of course, is Dave Wilson. He is our stocks editor here at Bloomberg News. And Michael McKee, international economics and policy correspondent at Bloomberg News. I'm going to talk about that bounce back and continued gains in the stock market. But Mike, so much of what investors think about is, what's going on in the economy. We got some eco news this morning.
Well, we got jobless claims. The big number of the week, obviously, comes tomorrow with the jobs report for September. And the claims numbers this week don't tell us what happened a couple of weeks ago when they took the survey, but it does reassure people that the job market isn't doing too badly, because we had 3 weeks in a row where claims were going up, and this week they went down. So 326,000, that is what qualifies as good news these days.
Also some good news from ADP earlier this week. Can we read any connection? I always get a little bit of pushback when I ask this question.
ADP can tell you something about the direction and not really the magnitude. So the fact that they came in higher than anticipated and over the 500,000 mark is another sign that the labor market is probably going to give us a decent report tomorrow. The big problem, the big caveat is we've never done this before. We only shut down the global economy one time, and we've only reopened it one time, so we can't say for sure.
Yeah, exactly. All right, for what we can say for sure is it's pretty broad-based buying, although energy, Dave, which has often been atop the list as of late when it comes to those major industry groups in the S&P 500, it's up, but not as much as it's been.
Not as much, and you contrast that with the raw material producers, the best performers on the day among the 11 main industry groups in the S&P 500, and 10 of the 11 are higher. The only exception, utilities. And that's sort of understandable because, let's face it, utilities borrow a lot of money and they have relatively high dividend yields. So for a lot of investors, they're an alternative to bonds. And, you know, when you see yields rising in the bond market, not good news for those companies. And that's how it's playing out in today's trading.
How much have we risen?
As far as
we're up. Yeah, we're still below 157 on that 10-year note. Mike,
Getting close.
When you look at the Treasury trade, I mean, does it kind of coincide with what we're seeing in terms of economic data points?
Yeah, there's not really anything that is untoward here. You would expect a steepening of the yield curve, a little bit of a steepening of the yield curve if investors thought things were going to get better. Plus, we're pricing in a little bit of an inflation premium now that we weren't before. Not a huge amount, but some. So a change, you know, I hate to fall back on technicals, but those were influencing the markets for a while. So a change in the level to where we are now is certainly within bounds. It doesn't really tell you that there's anything going on one way or another, except that the market has decided things are okay. I don't want to say great or I don't want to say bad, but they're okay.
What about when it comes to substantial further progress? The three words that we watch so closely in the context of the Fed. And I think specifically with what happens tomorrow, if we get a big whiff on those numbers like we got last month, does that change the timeline for any sort of pullback from the Fed?
It could be hard because the Fed has made the case that the economy is getting a lot better. And so if we got the August result again or a little worse, it might be harder for them to make the case for tapering. And I suppose it could push it off a month. But remember, Jay Powell said that it doesn't have to be a stellar number. It just has to be an okay number. And if you're looking at 500,000, if we get anywhere near the consensus, then that's going to be just fine. And tapering is on track for announcement at the November meeting.
Did you say whiff?
Yeah, it was a big whiff last month, right? Swing and a miss, right?
Watching the Yankees.
I think so. Exactly. Dave, what else is on your radar?
Well, I mean, at this point, it's a matter of looking ahead to earnings. Let's be honest. You know, we're less than a week away from starting to see third quarter results. So,
kind of excited.
Yeah, absolutely. I mean, we got a couple of reports out of food companies today. Conagra Brands, they beat in terms of estimates, but you know, the shares didn't do so much, or basically little change. And then you had a disappointment out of Lamb Weston, which makes frozen French fries and other potato products.
Different kind of chips, right?
Yeah, you might say that. But what you can say for sure is that the shares are down 5.5%. There's only one stock that's doing worse in the S&P 500, and you may hear more about it later.
Deep
I was
tease.
surprised that the French fry maker did badly because in August we all stayed home again.
Eating fries, ordering burgers, doing all that good stuff.
Hey, you went to Idaho. You didn't miss that trip to Idaho.
No, I didn't miss the trip to Idaho.
Okay.
10 seconds, stagflation. Should we be worried?
No.
Okay. Jeez, he did it in two. I love Michael McKee, international economics and policy correspondent at Bloomberg News. Love Dave Wilson, too, who will be back with his chart of the day.
It's time for the Bloomberg Business Week Bite of the Day. It's one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. You can learn more at GEP.com.
So today's number, it is 20. A poll by technology consultancy Capgemini found that 20% of people around the globe have already taken out buy now, pay later loans, while about 60% think that they will try the service within 2 years. Fintech firms such as Klarna and Afterpay have grown into multi-billion-dollar companies by offering customers the option to pay in installments when they shop online. I feel like apps increasingly, I'm seeing that here's your, one price, you buy it now, or you can make 4 payments, installment payments over X, period of time.
Not to mention a company like Affirm, which yesterday just shot up. Now it's up just in the last few days, Carol, 3 days by 25%.
I remember when you used to have like Grandway layaways. I'm dating myself.
It's back.
I know, all this stuff is back. All right, also back, lucky for us, Nancy Lyons on World and National News out in D.C. Hey, Nance.
Hey, Carol. Well, Senate leaders have reached an agreement on extending the debt limit for nearly 60 days. Senate Majority Leader Chuck Schumer confirmed the deal while speaking on the Senate floor.
We have reached agreement to extend the debt ceiling through early December, and it's our hope that we can get this done as soon as today.
The plan would raise the statutory debt ceiling by $480 billion. That's according to a Senate aide. The amount would allow the Treasury to meet its obligations through December 3rd, which is the same day the current short-term government spending bill runs out. Senate Minority Leader Mitch McConnell proposed the short-term extension yesterday. The Senate Judiciary Committee has released a report detailing how the former president put pressure on the Justice Department to overturn the election results.
The interim report was written by the panel's Democratic majority and says President Trump put, quote, relentless direct pressure on the Justice Department. It also listed different times that then White House Chief of Staff Mark Meadows pushed the department to initiate election fraud investigations. Committee Republicans said the president only wanted to be sure the Justice Department was aware of fraud allegations and did not pressure officials. In Washington, I'm Amy Morris, Bloomberg Radio.
18 former professional basketball players have been accused of defrauding the National Basketball Association's health care plan out of $3.9 million by making fake claims for medical and dental expenses. Terrence Williams, the 11th overall pick in the 2009 NBA draft, is alleged to have orchestrated the plan. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,500 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic in our Interactive Brokers studio. A lot going on this week, and one of the things that has been going on, our Bloomberg Live team pulling together top voices when it comes to finance and investing from around the globe. It's called Bloomberg Invest Global. Wrapping up 3 days of programming today. And our David Weston caught up with Stephen Mnuchin, the former U.S. Treasury Secretary. And that former U.S. Treasury Secretary warned about the risks of breaching the debt ceiling, overspending by the Biden administration, and concerns that it could further fuel inflation. Here's some of David Weston's conversation.
The good news is the economy is rebounding very strong. Labor prices are up. So I do worry that this will be ongoing inflation, and we could easily end up with 3.5% 10-year treasuries, which again just increases the cost of the national debt and creates budget issues.
Again, that was Stephen Mnuchin, former U.S. Treasury Secretary, talking with Bloomberg's David Weston at the Bloomberg Invest Global Virtual Conference. Mnuchin, by the way, didn't specify when this all could happen. Yields currently around 1.55%. They've doubled since last October. He did point to rising oil prices, though, as evidence of inflationary pressures, and said it was time for the Fed to normalize monetary policy. Although, Mr. Putin may be our hero.
Coming to the rescue?
Exactly.
Yeah, helping ease the global energy crunch.
Yeah, so we've definitely seen that play out in the energy markets. Mnuchin had more to say.
Yeah, he did. He said that, quote, there should be a discussion around what is the appropriate level of national debt and national spending. He didn't join those 6 former Treasury secretaries who appealed to Congress to raise the debt limit. That was in a letter you might remember last month, but he did make clear that he backs addressing the issue to avert a crisis.
He also did talk about crypto, and he says crypto stablecoins shouldn't be like casino chips. He says he favors regulation, banking guidelines. So he did talk about this specifically. He said, as I said, they shouldn't be like casino chips. If you're going to issue a stablecoin, the actual money should be be held in a regulated bank and a trust account, and people who hold the stablecoins should be able to exchange those for real dollars at any time. So many are weighing in.
We're going to be talking a little bit about this more later, especially in the context of, other stablecoins.
Yeah, the cover story this week.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are surging as debt and energy worries ease. S&P on track for its best three-day advance since April. Oil is rebounding. 10-year Treasury yields rise ahead of tomorrow morning's jobs data. Stocks close to session highs, with the S&P up 53, up 1.2%. Dow up 444 points now, up 1.3%. NASDAQ up 213, up 1.5%. The 10-year down 13.30 seconds. 10-year yield right now 1.56%. Gold, spot gold down 0.3%, 17.56 the ounce. Bitcoin down 1.6%, 54,080 right now on Bitcoin. West Texas Intermediate crude up 1.2%, 78.34 a barrel. Natural gas lower, little change now, down less than 0.1%. Levi Strauss shares surging now, up by 9.1%. Levi posting third quarter sales that topped Wall Street's expectations. Again, recapping, equities higher, S&P up 53, up 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really fascinating to see the market trade today, because earlier in the week we talked with our Dave Wilson, Tim, about these 1% moves either up or down on the S&P 500, but here we are potentially, getting ready for our third day, you mentioned at the top.
Yeah, third consecutive day of gains.
For the S&P 500.
And they've been big gains, too. So we're going to see if these gains hold today. It would be among the biggest three-day stretches in months that we've seen.
Yeah, and technicians are going to be rolling out their charts, looking at the 50 and 90-day and, seeing whether or not we pierce some of those levels. We're already above our 90-day easily. And so we watch this to see in terms of longer-term trends and whether those trend lines, because I remember it was Abigail who was on earlier in the week who talked about, I think, the 50-day moving average and how the trend line, we talk about buying the dip, right? And said how that was getting a little bit weaker because the trend line in terms of gains was moving lower. And so showing that maybe not as many people were coming to the rescue to push the market higher when we saw some selling.
Right, but what's happening now? We see broad-based broad-based gains on, every sector is higher except for utilities, which is down just slightly right now. 443 stocks higher in the S&P 500, only 61 lower. People who listen to the show regularly know that in Beyond the Bell, we choose our gainers and decliners. It was a really tough day to actually find decliners because even companies that were underperforming the market were still in the green.
Only 65 names lower in the S&P 500 as we speak, 438 higher, 2 unchanged. Yeah, it's definitely broad-based buying. And we also talk about the things that have been on investors' minds, especially as we get ready for our next earnings season, which hopefully will provide some clarity when it comes to supply chains and the economic and market outlooks. But the news out of Washington has certainly been weighing on investors' minds, and we're starting to see some clarity on that, or at least postponement, pushing the deadline off, giving us a little bit of breathing room that maybe allows the president and his team and the Democrats to go back to work when it comes to that big infrastructure, massive spend.
I think a question that investors might have right now is what changes between now and a few months from now when that deadline does shift, right? We talk about kicking the proverbial can down the road.
We do this all over again, Tim.
Exactly, and that's what I'm wondering. We did see a nice reprieve, though, earlier in the week on the news that, that Mitch McConnell essentially had given in, at least for a few months.
You saw the clean correlation, direct correlation, some news, some progress out of D.C., and you saw the markets, which had been a lower day, move higher. So we have that going on. The energy picture is very interesting. That has definitely been weighing on everyone's minds. We have done some massive stories about it's not just a European energy crisis, but the world's going to be looking at this. And I still think that this is still a very significant long-term story. The dislocation you will see potentially in the market as we move from a carbon-fueled world to an alternative energy world, which has seen a lot of growth, a lot of money going into it, but there's going to be some discomfort, especially as supplies diminish in the carbon world and we move to alternative energy forms. And we don't also have all the capacity to store the alternative energy that is created.
Right
That's
there,
part of the big problem.
Yeah, and I think a lot of people that really came into sharp relief this winter in Texas when we saw what happened with the freeze there and the way that the grid wasn't able to handle the energy that consumers wanted there. I think, though, that storage is a really big part of this, Carol, because we haven't, if you haven't been following the market closely, you tend to think, I think, that with the move toward green, the move toward renewables, that it's going to be more seamless than it actually is. But it's going to be choppy, and there's going to be more of this to come.
Well, and it's happening as there is increased demand for all things energy. Yeah. So you've got to deal with, increased demand, maybe less supply perhaps in the carbon world or not enough in the alternative energy world. And what's interesting is the progressives in D.C. right now and the Democrats are really mounting a fresh effort to save some of those prized environmental programs in the Democrat stalled reconciliation bill. A key group of senators threatening to withhold support of the measure if it doesn't contain tough climate provisions. Ed Markey said, senator from Massachusetts, a Democrat, climate cannot and will not be cut. Climate must remain up front and center in this reconciliation package. And it's interesting to see what's going on in the U.S. because the U.S. has got to be increasingly looking at what's going on in Europe, who are really moving aggressively on climate initiatives. And, ultimately, if you're a company, if you're a manufacturer, you're going to look at the trends, right? Everybody followed California in terms of cars and gas efficiency because ultimately it spreads globally.
It does, but it's a lot longer process, I think, than a lot of people think about. I mean, in New York, for example, New York joining California when it comes to vehicles to phase out internal combustion engines by the year 2035. But it doesn't necessarily mean when we hit 2035, it's only going to be electric vehicles on the road, right? Because they've been sold for years before then. How long does somebody keep a car? How long does a truck stay on the road?
No, it's a good point. I just think about my own household, and I wonder, our listeners and our viewers on YouTube, I know you and I talk about it. I think about the next car we might buy and would really want it to be an EV, and I like that there's going to be more choices out there. All right, lots to consider on this Thursday. One thing we heard Charlie Pellet mention, shares of Levi, they are certainly an outperformer, up almost 9% in today's session, and this is after third quarter sales topped Wall Street expectations. The company also boosting its full year profit outlook, authorized a $200 million share buyback program. So great to have with us Levi Strauss & Company CEO Chip Bergh. He is joining us via Zoom in San Francisco. Hey Chip, so nice to have you here on Bloomberg. How are you? And it seems like you guys had a pretty good quarter.
Yeah, it was a great quarter. It's great to be here with you, Carol. Thank you very much for having me. We're really pleased with the quarter, especially when you consider the macroeconomic headwinds that we've been facing, supply chain challenges and everything else. Our team around the world is just doing an exceptional job executing. We delivered sales growth of 41% versus last year, but importantly, we were up 3% versus pre-pandemic 2019. And, we expect to be up versus 2019 in the fourth quarter as well. So really good quarter, strong profit delivery, but, we've just done a great job navigating all of the challenges that are facing the industry.
I can hear it in your voice. I think both Tim and I are looking at them. So tell us about the challenges. I mean, what is it that you can't get? What is it that you have to pay a lot more for? Tell us about that.
Well, I think, supply chain challenges have been in the news and have affected really all of the soft line and apparel stocks over the last three months or so. Port challenges are obviously an issue. COVID is impacting a number of countries in Asia. Many factories are shut down. But what we've got going for us is I actually believe our global supply chain is a competitive advantage. We have a huge amount of scale. We made a decision a long time ago that we were not going to put all of our eggs in one basket. We source from 24 different countries. No country represents more than 20% of our total volume. And we also cross-source. About half of all of our volume is cross-sourced, meaning we could make that same product in different factories in different countries, which gives us an incredible amount of agility so that if a factory shuts down, unfortunately, because of COVID, we can quickly move that production to somewhere else that's still operating. So that's given us a ton of agility. I mean, just to dimensionalize that, Vietnam's been in the news a lot here lately. We're importing less than 4% of our product right now from Vietnam. And so that's big. We've also been really agile on the shipping front. In fact, we've locked up about 75% of our shipping through the first half of next year, of the capacity that we need. and we've been able to, ship deliveries from the West Coast to the East Coast, given the West Coast port challenges. So our diversified supply chain and the team that we've got really is a big competitive advantage. We left, we did $1.5 billion of revenue in the quarter. We left $10 million of revenue on the table from unfilled orders.
Wow.
So really a great job.
Hey, Chip, cotton prices have surged 50% year over year, according to Bloomberg Intelligence. Shipping prices, I know for you, have increased. You did say yesterday, Levi's indicated that you have pricing power and you're able to pass on some of these increased costs that you face to consumers. How much pricing power do you have? How much more are customers going to pay for their Levi's?
Well, a couple of things, Tim. First of all, it's clear inflation is here, and it's not just cotton; it's everything. It's labor costs, it's shipping costs, it's truck costs. It's really everywhere. We saw it coming over a year ago, and we took pricing. We've been taking pricing for the last year. Our AURs are up pretty significantly over the last 2 years. And it's because we saw inflation coming and we've been pricing ahead of inflation and have been successful. It's sticking. And so a lot of that, and that's part of the reason you're seeing such high gross margins, 57.5% gross margin. This past quarter, we've been in the 57s for the last 3 quarters. And it's because we've successfully passed on pricing. We don't buy cotton. We buy fabric from mills, and we've already negotiated our cost of goods sold through the first half of 2022 with a low single-digit 1% cost inflation built into our cost of goods. We're in the midst of negotiating for the second half. I expect that's going to be higher, obviously, given what's happening to cotton. We're expecting it's going to be somewhere in the mid-single-digit area.
Right.
If it's more than that, we may have to take additional pricing, but we've priced ahead of inflation and feel that we're in a pretty good place right now. We're also confident in the strength of the brand that if we need to take more pricing, we can do that very surgically and recover the higher costs.
So maintain your margins, basically.
Exactly.
Hey, listen, you said, I thought it was interesting, Chip, you said that you saw inflation coming about 2 years ago. Are you saying that there were problems in the supply chain pre-pandemic? Because I think this speaks to, we are trying to figure out inflation, transitory or not, right? It's the big question of the day. What would you say, someone who has to manage your supply chain so carefully, is this a bigger deal that stays with us longer?
Yeah, it wasn't really 2 years ago we saw it coming. It was about 18, right? Kind of coincidental with the pandemic and the lockdowns. We knew that there was already going to be pressure from a labor standpoint. We were seeing that here in the U.S. in particular. I know there's a lot of debate about whether inflation is transitory or not. I personally believe it's here to stay, and that's why we started taking pricing action early. Instead of a big, huge 20% leap in prices, it's better to get the consumer there slowly over a series of price increases. And so we got going on it early, and I think we're out ahead of the curve.
Yeah.
Our AURs are up kind of in the mid to high single digit area versus a year ago and 2 years ago. So I believe it's here to stay. I mean, we're looking at higher labor costs. Wages are going up pretty significantly around the world. There's a shortage of labor for different types of skills. So I think we're looking at this for at least the next couple of years.
Really quickly, 10 seconds. Am I going to have trouble getting my Levi's for Christmas?
No, there will be Levi's underneath your Christmas tree. We're spending more on air freight this quarter than what we typically do in a normal year.
Wow.
We're going to do everything we can to make sure we service the demand that is out there. We're chasing inventory right now, and I jokingly say we're spending so much on air freight we could probably buy a 747.
Funny,
you'll
but
have Levi's under your tree, and I hope you'll be giving lots of Levi's for others to put under their tree.
Got it. Well, I hear Santa's done well in the stock market, so he can afford to spend a little bit more to get it all here. Hey, listen, thank you so much. Do come back soon, because your story is an incredible one. Levi Strauss, and Company CEO Chip Bergh. This stock, also one of the outperformers of the day.
Well, let's get a check of the latest when it comes to business news and the trading day. Here's Charlie Pellet.
Thank you very much. Right now, Levi Strauss shares are up by 9.3%. Year to date, up 31.9%. Equities higher across the board now. The Dow, the S&P, NASDAQ all rallying on this Thursday, bolstered by progress on debt ceiling talks and easing concerns about Europe's energy crunch. Right now, the S&P up 49. We're off session highs, but still up 1.1%. The Dow doing a little bit better, up 423, up 1.2%. NASDAQ, the outperformer today, up almost 200 points, up 1.4%, while the NASDAQ 100 index up by 1.2%. 10-year yield, 1.57%. Spot gold down 6.82 the ounce, down 0.4%. Bitcoin down 1.6%, 54,037 on Bitcoin. West Texas Intermediate crude up 1.2%, 78.39 a barrel. Natural gas down 0.2%, $5.66 per million BTUs. Pfizer and BioNTech are seeking approval from the FDA for its vaccine to be administered in young people between the ages of 5 and 11. American Airlines telling employees to get fully vaccinated by November 24th or lose your job. Meanwhile, the country's COVID numbers appear to be heading in the right direction. Dr. David Dowdy is an epidemiologist at the Johns Hopkins Bloomberg School of Public Health.
I think we have rounded the corner. It doesn't mean that there's not another surge in front of us, but cases are definitely going down. And all of those cases are Delta. So I wouldn't say it's fading away. We're still at about 100,000 cases a day, so it's still a big deal. But it is going down, and it looks to be a real trend.
Dr. Dowdy of the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. I'm Charlie Pellet. That's a Bloomberg Business Flash.
A lot going on, and it feels like progress being made in Washington. Senate leaders have reached agreement on a deal that staves off any default on federal payments into December. That we call a caveat. Let's get to the latest, Tim, and find out what's going on in the nation's capital.
Joining us is Jody Schneider, political news director for Bloomberg TV and Radio. She joins us right now from Washington, D.C., from the Bloomberg 99.1 studio there. Jody, give us an update, because Schumer says the debt limit deal is reached, a vote's possible. Give us the latest where you are.
Yeah, well, we just heard from the majority leader. He said that the caucus, his Democrats, are fully behind the deal. So we know now that they want to vote on it. The question is when. The Senate procedure always is more complicated than anyone would hope, I think. They basically, if they get all 100 senators to agree, they could move this up. They could expedite this and perhaps vote on this as soon as today. But if not, it would votes could occur over the weekend under the procedural limits and time limits that have to take place in the Senate. The other question is, when would the House vote on it? Because even though the House has voted on the debt limit, this is a different package now, and so they would have to come back. They're not supposed to be in session next week, but they've activated some procedure in which members could be called back within 72 hours notice. So technically, this could all be done by relatively early next week, which obviously the markets would like to see.
Technically, but realistically?
Well, that's the question. In Washington, it never goes according to plan.
Gives you something to be busy about, right?
That's right. But it looks like this will happen now. I don't think anyone thinks it's not going to happen. It will happen. It's just a matter of the machinations. The real question is what happens on December 3rd,
right,
when a number of deadlines expire. They're going to have to do this debt ceiling again, and they're going to have to fund the government again. What the procedure by which they were able to avoid a government shutdown last week, what they call a continuing resolution, basically kicked that can to December 3rd. They have not passed any of the budget bills, so they need to somehow do all of that before December 3rd and figure out this time how they're going to get that debt limit extended. Many people would like to see it extended a lot longer than 2 months.
I was talking earlier on air, Jody, about how progressives are now saying if there's no climate, no deal in this massive spending plan of the president. Where does this fit into we've got a little bit of breathing room right now, but again, the clock starts ticking again until December. But does that provide some really constructive breathing room to maybe get something done on infrastructure?
Well, that's certainly what the Democrats would like. They're trying to spin this, if you will, as well. This allows us to try to go back to our other work that we want to get done, the infrastructure bill, the Build Back Better plan, that they have not been able to do these past few weeks because they've been worried about the debt limit. But the Republicans could make that hard for them because they're saying that, hey, they haven't changed their minds on making the Democrats do this with only Democratic votes, which is the reconciliation process, and also trying to blame them for the debt. So this will be a very interesting few months, and of course a very interesting December when a lot of these things could be all coming up at the same time.
Yeah, I do wonder how, Jody, this plays into midterms, especially on the Republican side, if they are successfully able to, really hammer that message that Democrats are indeed spending out of control.
Yeah, and the Democrats are going to have to be very careful here. You put your finger on it because clearly Mitch McConnell, who is a master tactician, wants the Democrats and debt, those two things to be connected in voters' minds. The Democrats want to pass an infrastructure bill, but they're going to have to be careful about that price tag, or it could cost them control of both chambers of Congress next November.
All right, so what are you waiting on now? What's the next thing?
Well, so the next thing is we have to hear when they're going to vote on this. How are they going to do this? Can they get all 100 senators to agree that, yes, let's just do it today, let's kick it to the House, and the House will do it quickly? Or are we going to have another few rounds of this? We're also going to hear from the president this afternoon, who is going to be in Elk Grove Village, Illinois, talking about the need for vaccines and what businesses are doing. But he may weigh in on this as well. As you know, yesterday, he invited some CEOs, most of them virtual, but for a White House chat about the need to resolve the debt ceiling.
Hey, did any of that have to do with moving forward on the debt ceiling, do you think, in the conversations you're having in and around D.C.? Just quickly.
It's hard to tell. Yeah. I think that that didn't necessarily hurt, but I'm not sure that Mitch McConnell was sort of waiting to hear from CEOs either. Okay.
I figure he's got his own little thing going on.
I think so.
Jody, great stuff. Jody Schneider, she is political news director for Bloomberg TV and Radio, joining us from our 991 studio in Washington, D.C. Does feel like things are moving a little bit again, even though we've got a new clock counting down to December.
We do, but I think that markets have indicated, investors have indicated, at least equity investors have indicated that they believe this is going to happen.
Right, and also watching that there might be, that virtual summit between Xi and Biden too. That maybe shows a step forward when it comes to U.S. and China.
Well, let's stay in Washington, D.C. and get to check the latest world and national news. Nancy Lyons is standing by. Hey, Nance.
Hey, Tim. Well, as Jody was just describing, a deal has been reached to extend the government's borrowing authority into December. And while a crisis may be averted for now, it may have left a stain on America's reputation abroad. Bloomberg's Irv Chapman reports.
The political stalemate has damaged America's ability to influence world affairs, Richard Haas, president of the Council on Foreign Relations, said in a Bloomberg interview.
The disarray means we're no longer a model that others respect or want to emulate. We're not predictable. We're not reliable. It raises fundamental questions for those who are dependent upon us for their security. I actually think the greatest threat is not China or North Korea or Iran or Russia. It's ourselves.
Haas, who served in the two Bush administrations, added that why serious centrist Republican senators are following an irresponsible path on the debt issue is beyond his understanding. In Washington, Irv Chapman, Bloomberg Radio.
President Biden is in Chicago today, where he's promoting vaccine mandates. Chicago was picked in part because it's home to United Airlines, one of the first major carriers to require shots for its 67,000 employees. Other airlines have followed with similar requirements, including American, Southwest, JetBlue, and Alaska. Senate Democrats are releasing an extensive new report on former President Trump's efforts to overturn the 2020 election results. Illinois Democrat Dick Durbin, who chairs the Judiciary Committee, says the report shows just how close the U.S. came to a full-blown constitutional crisis. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much, Nancy Lyons. Well, we got a lot to get to on the show today. Carol, I want to talk a little bit about semiconductors because it does seem like that the wait for semis turns pretty ominous for automakers. We did see that play out this year as the global chip makers haven't been able to get their chips to the car companies.
Yeah, stocks up today The stocks, the Philadelphia Stock Exchange Semiconductor Index up 1.6% as we speak. But yeah, the amount of time that automakers and other companies need to wait for chip orders to get filled rose yet again in September. So another sign that those semi shortages will continue to hamper the global economic recovery because of the COVID-19 pandemic. We just talked with the head of Levi's and just talking about the supply constraints and what they're doing to ensure that they can get what they need in terms of their supply chains. But it's really pretty dramatic when it comes to semi shortages. Why are you smiling?
I feel like a pair of jeans is the last thing that exists that doesn't actually have a chip in it. At least not yet.
At least not yet.
Yeah. The gap between putting in a semiconductor order and taking delivery, this is what's known as lead time in the industry. It rose another 5 days in September to an average of 21.7 weeks. So I'll repeat that. The gap between putting in an order and actually taking delivery rose to an average of 21.7 weeks. That's like almost half a year.
It's
to wait for your
significant.
chip order.
And to create a new semi-factory or, it's not something you do overnight. It takes, I think, what did Michael Dell say, 3 years or something like that?
to build a plant.
To build a plant and really get it up. I mean, what?
I just want to note that's from Susquehanna Research.
Oh, okay, good, in terms of sources.
Yeah.
And these semi-shortages really hammering those automakers just as we're seeing the integration of new tech and the transition to EVs become key competitive battlegrounds. Alex Partners, a global consulting firm, estimated last month that the global automotive industry will lose about $210 billion in sales for 2021 alone. So this is why we care, because this is potentially what we see play out when it comes to the top and bottom lines.
It's why we care. It's why we watch used car prices so closely as well. And it's also why we heard that car companies were actually changing what's in the cars as a result of chips they couldn't get.
I talked about Levi's under the Christmas tree.
Yeah.
You know what might not be under the Christmas tree?
A car?
Yeah.
A new EV for you?
Chips, extra chips, electronics.
Yeah, not potatoes.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are off session highs, still green on the screen on this Thursday here. Stocks are advancing as debt and energy worries ease. Right now, the S&P is up 44, up by 1%. The Dow Jones Industrial Average up 372, up 1.1%, while NASDAQ is up 183, a gain right now of 1.3%. 10-year's down 14.30 seconds, 10-year yield 1.56%. Spot gold down 0.4%, 17.55 the ounce, while crude is up 1.3%. West Texas Intermediate crude now 78.46 a barrel. IBM says all of its U.S.-based employees have to be vaccinated by December 8th or be put on unpaid suspension. The company has told workers that because it is a government contractor, it is required to adhere to President Biden's vaccine mandate for federal contractors. IBM shares, they're down now by 0.3%. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
All right, Charlie, thank you so much. So this week's cover story, it also happens to be today's Bloomberg Big Take on the Bloomberg Terminal. It is about Tether. It's the world's most popular stablecoin. It's a type of cryptocurrency that is favored by traders mainly because it's backed by real U.S. dollars.
Yeah, but where,
or maybe not mainly,
or is it backed by real U.S. dollars? That's the question. It's this week's cover story. Joining us now is Zeke Fox. He's a financial investigations reporter at Bloomberg News. He's with us in the Bloomberg Interactive Brokers studio. Zeke, I don't even know where to start. We have Inspector Gadget, a retired plastic surgeon, a star of the Mighty Ducks, all being characters in a story that trails multiple continents.
Yeah, so it's been a mystery for years. There's always been this cryptocurrency called Tether that's worth $1 because each coin is supposedly backed by $1 in the bank. But there have always been these critics who are saying, where are these dollars really? Does this company really have the money it claims? And this year, they've been printing like a crazy amount of Tethers. So there's now 69 billion of them, which means the company is supposed to have 69 billion of real dollars somewhere.
Real U.S. cash. It needs to be backed by real U.S. cash.
Exactly. That's what they've promised. And I went out to try and figure out, all right, where is this money? What have they done with it?
How much of it did you find?
Joel Weber joining us, editor of Bloomberg Business Week.
Was a little disappointing because I was hoping there would just be like a pile of gold somewhere, but I realized that that's not really how money works these days. Yeah. But it turns out that one of their biggest banks is down in the Bahamas, and I went and met with the chairman of the bank. It's called Deltec, and he said that they hold about 15 billion, I think he said, of the 69, but he's not quite sure. He can't speak for. He said that money's safe. It's here with us, but he can't speak for the rest of it. So, I mean, the reason this is really important is that Tether is sort of like at the center of the cryptocurrency world. You might think it's kind of like pointless, like why would you even want a cryptocurrency that wasn't going to make you rich? But this is the one that you use to send money from one exchange to the other, to place your bets at the exchange. Like essentially, if you think of the cryptocurrency exchanges as like giant casinos, these are the chips. And all of the casinos make you get the same chips, which are tethers. So it's like the connection between all the different parts of the cryptocurrency world. And so if these coins aren't worth $1, it could throw all these markets out of whack. It'd be like a huge deal for all of crypto.
Worth mentioning what he did before he was a Bahamian banker.
Yes, so very impressive dude, Jean Chalopin, the chairman of Deltec. He actually, his first big success was creating the cartoon about the cyborg cop, Inspector Gadget, or cyborg
Staple
detective.
of my childhood.
Yeah, mine too, Joel.
Yeah.
Dates us. We're old.
So he got very rich from that and making also some other cartoons. He sold his studio, moved to the Bahamas, where he bought this beautiful pink colonial mansion that you probably saw in the James Bond film Casino Royale. It was
You cannot make this stuff up.
Yeah, it was the villain's there's a villain's house in that, and it's certainly nice enough to be that. And he then bought this bank in the Bahamas, and I mean, the whole thing is hugely hard to wrap your mind around. But essentially, Tether needs banks. It needs banks to hold money because people send Tether real money to get the Tether coins. And they've had a lot of trouble over the years finding banks that will do business with them because a lot of banks have just not wanted to do business with cryptocurrency companies in general. And so this Deltec Bank of the Bahamas was one of the few that would, and really saved them at a time when they were struggling to figure out what to do with their money.
Might this be a Ponzi scheme?
So that's what some of the harshest critics have said. I mean, the information that I got is that they are taking this money and investing it. And rather than it just being totally a giant scam, it's all made up, it's more about a conflict of interest where when you buy a Tether coin, you really want it to be safe. You really want to get your dollar back no matter what. If you
assume that backing will be there, right?
Yeah, but it turns out that the way it's structured, the owner of the Tether company, he's now sitting on $69 billion. He can invest that money in different things, and if any earnings on those investments go to him. So even if he earns 1%, that's $690 million, and there's not much expenses in running this company. It's a really small operation. So his incentive is to invest in weird stuff to try and make some money. And what I found was that, in fact, a fair amount of it, billions, was invested in Chinese commercial paper, which is kind of something that people on Wall Street really avoid. There's most commercial paper is held by money market funds, and they just basically will not buy Chinese commercial paper. There's very few of them have much of it. So this is a big risk. Yeah.
So what's at risk for crypto and maybe the rest of us if you can't trust Tether?
So on some of the biggest exchanges, the trades are denominated in Tether. And it's become so natural that people almost forget it. But you're buying your Bitcoin versus Tether. And so if people no longer trusted Tether, they would all want to dump Tether to buy whatever they could with it if they're worried that it could go to zero. So it kind of bizarrely on those exchanges, it would probably drive up the price of cryptos in the short term. But it would be at least in Tether terms. But it'd be a huge disruption because still, even almost a decade into this whole cryptocurrency boom, a huge part of the economy, the crypto economy, rests on these weird stable coins instead of real dollars. And it's something that the traders kind of take for granted, but
Well, it's stable coin. Talk about the messaging there.
And we think that there could be some news in the near future out of DC around stablecoins, right?
Just quickly, 30 seconds.
Yeah, so there's a Treasury Department commissioned a report about stablecoins. Basically, every financial regulator has said somebody's got to do something about this. And it's not clear exactly what they're going to do, but it seems unlikely that they'll just let it ride, where you have the whole cryptocurrency world relying on this unregulated $69 billion quasi-bank thing called Tether.
Well, on the money trail from Taiwan to Puerto Rico, the French Riviera, mainland China, and the Bahamas. He didn't go to all the places, but he did go to some. It is an amazing story. It's the cover story of Bloomberg Businessweek magazine. Zeke Fox, financial investigations reporter here at Bloomberg News, along with Joel Weber, editor of Bloomberg Businessweek. Check it out. It's the new issue of Businessweek.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Stocks are off session highs, but nonetheless green on the screen. Stocks are advancing, bolstered by progress on debt ceiling talks and easing concern about Europe's energy crunch. S&P up 40, up 9/10. The Dow up 349, up 1%. NASDAQ up 182, up 1.3%. 10-year yield 1.57%. Spot gold down $7 the ounce, down 4/10, $17.55. West Texas Intermediate crude up 1.4%, $78.50 for a barrel of WTI. Wall Street's looking ahead to tomorrow morning's jobs report. Alicia Levine is head of equities and capital markets advisory at Bank of New York Mellon.
So we think there's actually risk to the upside in the number, simply because with the expiration of the unemployment benefits, we're going to get it captured in this month. But in addition, if you look at the data set, talking about use of services, travel, restaurant visits, it's actually started to tick up in the last few weeks of September. And why does that matter? Because we think it's going to open up the service sector in terms of employment.
And Larry Adam is Chief Investment Officer of the Private Client Group at Raymond James Financial.
We're looking for 440,000 jobs to be created, the unemployment rate to go down to 5.1. And, you know, look, unless that number comes in at around 100,000 or lower, that's more or less the more disastrous number. And I think that could cause some pause.
And that number drops 8:30 a.m. Wall Street time. It is projected to show non-farm payrolls grew by 500,000. United says it's going to fly 3,500 daily domestic flights in December, the most since the start of the pandemic. Shares of United UAL down 1.9% right now. American down today by 2%. Delta is dropping 0.8%. Southwest rounding out the big four down 0.6. JetBlue shares down by 1.3%. Recapping stocks higher. S&P up 42, up 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic. I'm still thinking about that story by Zeke Fox. It's just the cover story of Bloomberg Business Week magazine. It's about Tether, the world's most popular stablecoin, but it really just gets into so much that we're trying to still figure out when it comes to the crypto world.
Yeah, which is, I think, for a lot of
that.
people, like the tip of the iceberg, right?
Oh, totally. That story, you can catch it in our weekend Bloomberg Business Week show. You can catch that 8 a.m. on Sunday and also on our podcast feed.
Hey, one story that got my attention earlier today was the latest from Mark Gurman, technology reporter at Bloomberg News. Apple's plan for cars, well, not necessarily building a car that we can get anytime soon, but talking about using the iPhone to control other parts, like the air conditioning, the seats, and the radio. The big question, are car companies going to budge and let Apple do that? Well, joining us now is Mark Gurman, technology reporter at Bloomberg News. He joins us from our LA bureau. Mark, first of all, give us the details on what you uncovered about what exactly Apple is working on in this project known as Ironheart internally.
Sure. Thanks so much, Carol and Tim, for having me. So right now, as you know, CarPlay, you plug it into your car, over 600 models, and you can get your music, Google Maps, Apple Maps, calendar, what have you, right? But what you can't do is control key functions of the car. You can't control your AC. You can't control your heat, your speaker settings, your seats, armrests. You can't access the speedometer, the tachometer, the fuel instrument clusters, right? Well, with this new initiative, that will change. You'll be able to get access to that, whether that's for improved apps from first party and third party on CarPlay, whether that's a new central interface in CarPlay designed by Apple. That data will start being able to be picked up by your iPhone for the CarPlay system.
First of all, congratulations. It's a Bloomberg exclusive. Again, just bringing us something that Apple is up to. We're all taking notice. The other thing is, Mark, I think, is this kind of clever that Apple can be very involved in the car space without actually manufacturing a car?
This would be, the deepest involvement Apple has had to date in the car space without actually building a car. This is going to help give Apple some additional know-how and insight into the car world for sure. I think this is their biggest step in cars to date. Now, it's important to note that besides CarPlay, Apple's other car-related initiatives have been pretty much failures so far. Let me walk you through a few of them. So in 2015, Apple started allowing car makers to build third-party apps to access, select system settings, 2019, it expanded CarPlay to work on some cars like the Porsche Taycan and other cars that have secondary screens, or on the Audi, you get digital instrument clusters as well. You can put CarPlay on there for some features like Apple Maps. 2020, they announced Car Key, which allows you to sort of use the wallet app to unlock your car, or with an Apple Watch as well, in addition to the iPhone. They added a feature called EV routing last year that allows, if you have an electric car, for CarPlay to sense how many miles you have left on your battery and navigate you as needed to charging stations, right? None of those features have taken off. Car Key is only on some BMWs. Beamer also has future cars with the EV routing. In terms of the apps, very limited as well. So not a lot of movement there, but Apple's hoping this bigger initiative will gain traction in the car world.
But will car companies allow it to gain traction? Will they push back on Apple potentially?
Yeah, of course, Tim, that is the big question. I think that really depends on consumer asks, right? If consumers are pushing car companies to adopt this new feature, they will have no choice but to adopt it. At the same time, it's not an easy decision for car makers, because here they are going to be giving up key aspects of the car to Apple, which, by the way, is a company aiming to eventually put them out of business, right, by building their own self-driving car.
Any ideas on what consumers would like? I mean, this whole idea, I mean, the phone just increasingly does everything for us, and an Apple phone, or whether it's a Google Android phone, I mean, we can do just so much from our phone. But I do wonder, do consumers, I think about, I have a car and I've got an app on my phone from the car maker that allows me to like unlock my car and do other things. Right. And I'm comfortable with that. And I wonder about, handing it all over to one provider. Do we know anything about what consumers want here, Mark?
Well, as you know, the car experience, the infotainment systems, the car operating systems on most cars, there are exemptions, obviously. Tesla does a nice job. Porsche does, a decent job. Audi is terrible. Volvo is terrible. Mercedes is terrible, right? So I think consumers would be pretty open to taking an Apple interface on in their cars, because that's Apple's bread and butter, right? Yeah. User interfaces. And people want to enjoy the experience of using their cars. And today, that's just not the case, because for whatever reason, no car maker has really cracked it.
I wonder, Mark, what this does specifically for Apple, apart from the ecosystem, right? I mean, this is not a financial move, at least directly for Apple, right? This isn't directly bringing incremental revenue to Apple. It's making the ecosystem more powerful and potentially giving the company data about how people interact with their cars?
Definitely not giving Apple data from, the car makers directly, right? There is this privacy approach to what they're developing here. But this absolutely would be, a major push for them. And it's going to be, I think, an all-out war at some point with these car makers, right? And I think driving adoption of this is going to be key. And in terms of being a moneymaker, there are some royalties involved with CarPlay. I'd imagine that would continue with this system. But on the other side, there's money to be lost if Apple doesn't continue locking its consumers into the ecosystem, right? Every time Apple adds a new feature like this, it gives users another layer of complexity to switching to another phone, right? You have your credit card in there now. You have all sorts of stuff in there now. Controlling your car is another. So this is protection against losing iPhone users.
Guilty as charged. I mean, increasingly, as we just lean in more as a family on everything, it's like the thought of going somewhere else, a different platform or different system or different technology, it ain't going to happen.
Or like, for example, if you were to leave it behind at home on your way to work, would you turn around and go back and get it?
Oh,
Sonny
totally.
Fu, who ran Misfit wearables for years, always talked about the turnaround test as being the mark of like a really solid piece of hardware. What are the other pieces of hardware that you would do that for, right?
It's a thing I make sure it's, wherever I'm going, I've got it. Mark Gurman, he is, as we've said many times before, and for good reason, he's a must-read when it comes to things here on the Bloomberg and at Bloomberg.com and anything when it has to do with Apple. Mark Gurman is our technology reporter at Bloomberg News, joining us once again from our LA bureau. Apple shares, by the way, a little bit higher in today's session, just seeing that stock up about 1.1% in a market that's up.
Well, let's get a check of world and national news. Nancy Lyons is standing by. Hey there, Nance.
Hey, Tim. President Biden is in Chicago to tout vaccine mandates. He's visiting a construction site for Clayco, a company that plans to require vaccines or weekly testing for its employees. Biden is also highlighting the example of Chicago-based United Airlines, which has said that 98.5% of its workforce has complied with an inoculation requirement. Pfizer and BioNTech have officially submitted their request to the FDA to administer their COVID-19 vaccine to children ages 5 to 11. Bloomberg's Amy Morris has more from Washington.
The companies announced the news on Twitter this morning. Pfizer and BioNTech last month released data to show the vaccine is safe and produced strong antibody responses in children as young as 5 years old. Researchers found that 1/3 of an adult dose could produce comparable antibody levels. The FDA has said that it would move quickly to consider the authorization and has already scheduled a meeting on October 26th to consider it. In Washington, I'm Amy Morris, Bloomberg Radio.
A short-term deal to avert what Senate Democrats say would have been a financial catastrophe has been reached with Republicans. Senate Majority Leader Chuck Schumer says he's hoping for a vote as early as today, although the weekend looks more likely. It was Senate Minority Leader Mitch McConnell who proposed the extension through to December.
The Senate is moving toward the plan I laid out yesterday to spare the American people the manufactured crisis.
McConnell is taking credit for resolving the stalemate. He's also receiving blame from some who say he was risking economic calamity by blocking attempts to lift the debt limit. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Right, Nance, thank you so much. Carol Master along with Tim Stanovic. So New York's office market, it's going to take years to recover from the pandemic as employers offer remote working options and reconsider how much space they need in Manhattan. This is according to State Comptroller Tom DiNapoli. Interesting that they say that. I was on a planning call for the upcoming Milken event. You and I are going to be there doing live broadcasts. And the group that I was talking with, I'm like, so is everybody back? And most of them are like, a lot of flexibility going on.
I feel like
a lot of it in New York.
Yeah, I mean, I do feel like I'm certainly, apart from friends who work in healthcare, right? It doesn't feel like a lot of my friends or media are actually, back at least 5 days a week. COVID-19, though, according to this report that was released today by Comptroller Thomas DiNapoli, as you mentioned, Carol, it's reduced the market value of New York office buildings by $2.6 billion and cost the city more than $850 million in property tax revenue for fiscal year 2022. So a big hit to the city's coffers.
Yeah, and I guess some of what we'll see is how long that persists. I mean, we do hear, we've talked about this, about the demise of big cities, and, we are seeing people come back, no doubt about it. And maybe we'll see a transition in terms of how office space is used.
What's interesting is it seems to be that we're seeing the residential real estate market bounce back in a different way, especially in parts of Brooklyn. And even now in parts of Manhattan. On fire.
What unifies these businesses is passionate owners, determined to drive their businesses
maybe it'll take a year, maybe 2 years, I don't know.
Through agile thinking and
but people said if people don't have to be back in the office, then they're not going to live in New York City, and that's not the case.
And when do companies start to say, who have maybe leases that last for a
we'll be
certain
looking
amount of
at
time, or
a live music
no,
venue,
we're not
recording
going to need
complex,
it. Hey, at the same time, when it comes to COVID, certainly watching things, heart damage from COVID-19 extends well beyond the disease's initial stages. This is according to a study that found even people who were never sick enough to need hospitalization are in danger of developing heart failure and deadly blood clots, 1 year later. So this is a study that was out and published.
I'm Chris Fitzwabi. I'm the co-founder and director
with Dr.
of Future Yard here in Center for Health Security. Brand new live music venue. It's also kind of a community centre for people from the local area here in Birkenhead. Future Yard itself is an idea that's been bubbling away for a number of years. It's amazing, really, that before we opened Future Yard, there was no designated live music space here in the world. So that was one of the main motivations for starting Future Yard in the first place, to give the people who love music somewhere to come, somewhere to make their own, really. We want the local community living here in Birkenhead to feel like Future Yard is a place for them. So we opened up Future Yard in 2020, just before the pandemic hit. We sold out a couple of shows, it was all very exciting, and then the world pretty much ended. That was probably the biggest challenge that anyone could ever have faced. So we had to learn how to do live streaming. So a lot of the kind of the tech that we were able to use through Samsung was really key in it and helping us, which was a real kind of like game changer for us, because it meant that the pandemic couldn't stop us from doing what we wanted to do. One of the things we developed when we were able to open up again was a ticketing system that allowed us to be as sustainable as possible. So we were trying to cut out physical ticketing as much as possible. So that was all done through mobile devices and apps. Samsung mobile devices helped us to kind of achieve that. I'm often running around the building with my phone or a tablet in my hand, grabbing some bit of content.
We're a kind of technically driven, tech-first organisation, both in terms of kind of how we function as a team, but also, we're part of the music industry, which has always been one of the, most forward-thinking parts of the creative sector. Pella is an artist development program, which gives emerging new musicians the chance to kind of develop their whole kind of creative practice, and the whole program is anchored in our Propeller app, which is essentially a dashboard for emerging artists.
Basically, this app's going to be a way for us to book in practice rooms, but also monitor any progress we might be making with music.
One of the other arms of the Future Yard is our training course and training program, where we offer loads of opportunities to young people from the area to engage with the live music industry. The main avenue we do that is Soundcheck, which is a training program that's open to 16 to 24-year-olds from the local area.
It's interesting that I get to help out people who are in the same position that I was in less than a year ago. So it's a great opportunity to give something back and to be involved in helping shape the next generation of live events professionals. I'm using the Samsung tablets to control my sound console and my mixing console, and to be able to control the levels and tweak things wherever you are in the room, which is crazy.
When we first started Future Yard, one of the key things that we wanted to do with it was to work towards becoming the UK's first carbon neutral music venue. It was massively key to us because we felt like it was our responsibility to do that, and also we kind of had the opportunity to do that because we were building a music venue largely from scratch. Tech plays a massive part in that, in not just the communication of it, but in also us being able to monitor what our kind of our carbon output is. Every aspect of what Future Yard is, they're all things that we're in conjunction with each other, and they feed each other, and that's ultimately what Future Yard needs to be.
Thanks for joining us for Work Wonders with Samsung. Don't forget to check out the other 2 films in the series featuring businesses making exciting things happen, all with tech at the heart of what they do.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P on track for its biggest 3-day gain since April. Stocks are advancing as debt and energy worries ease. What's going on? Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading higher right now, helped by debt ceiling progress. Dow's currently up 425 points. S&Ps are up 49. NASDAQ rises by 200. The U.S. 10-year yield at 1.57%. Gold is down 7. Transports fall 41 points. And Bitcoin drops by 1.7%. Among the main 11 S&P sectors, only utilities were in the red. And leaders to the upside in the Dow, UNH and Dow Inc., while only Amgen, IBM, and 3M fell. In other news, Lifetime opened up at $16.57. IPO was priced at $18, and Tesla spiked intraday, trading to $805 a share. After earnings, Lamb Western fell as much as 13%, and wrapping things up, Accolade reports after the bell. Live from the first breaking news desk on Bloomberg.
Okay, we thank you very much, Bill, and here live. Breaking news over your Bloomberg Type Squad. SQUAWK on your terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Pull him back.
Thanks so much for that update, Charlie Pellet. Well, we told you about some of the COVID headlines that were and the stories that we were following, specifically the story about heart damage and rocking COVID survivors a year after they get infected. Joining us now is senior scholar from Johns Hopkins Center for Health Security and Bloomberg School of Public Health, Dr. Gigi Gronvall, joins us on the phone from Baltimore. Dr. Gronvall, it's great to have you back with us, one thing that I've been thinking a lot about when it comes to where we are in the pandemic is testing and the evolution of testing. And we did hear from the Biden administration that they are making a significant push to increase the availability of home tests this week. And I wonder to what extent you think that will help us get to the other side of the pandemic if we can easily get home tests.
Yeah, so home testing is really important, and I think it's been demanded by lots of people. That's why you haven't seen them on the shelves recently. So this move to increase manufacturing and to get more.
Hi, I'm Harriet Hall, lifestyle editor of The Independent, and welcome to our independent TV original series, Work Wonders with Samsung. Across the course of 3 films, we'll be celebrating the success of 3 very different businesses.
Okay, help me understand though, these are not PCR tests that we will have access to at home, right?
No. These are tests that look for the amount of virus basically that you have in your nose at that moment. So you get a result 20, 30 minutes depending on the test after you take it. And so it doesn't have the amplification step that PCR has, so that it can't detect like really weak signals and tell you that you might be infectious in 2 or 3 days. But it can tell you if you're infectious right now, which is really a key thing for public health.
I do think that's a challenge. Carol and I are, traveling for the first time in a long time, and we have to get a PCR test within, a certain number of hours before we go to this event.
I think it's like 3 days.
Yeah.
2 or 3 days.
Yeah.
Well, I have to say, I was Googling last night and this morning and looking at boosters and what the CDC says about who's allowed to get. And it says, if you are likely to be around a population where you increase your chance, maybe of, I think, getting COVID. I really was trying to understand, because I have to say, I'm coming to the 6-month point of my second vaccination and trying to understand. I really don't want to be one of those people who really aren't approved at this point to go get a 3rd shot, but I am thinking about it. Do I need to be concerned? And some of what I've read has said you've got immunity and your body has this great memory response that if you do get COVID, it will react and take care of you so that you won't be hospitalized. I mean, that's the science behind it. But nonetheless, I get a little nervous when people say, even if you get COVID, there could be long haul complications. That freaks me out. What's your advice to all of us?
Yeah, I think it's important for people to not overthink this, and we don't have a supply issue right now. So, if you get a booster shot, it's not like that shot would have gone to somebody else who really needed it. There's really good data to support older people to get the booster shot. That's clear. That's the science is there for that. It's a little murkier for people who are not seniors, whether or not they need it. But these are safe and effective vaccines. If you think that you might at least give you peace of mind, then go ahead and get it, because the guidance right now is so broad that you probably are encountering people who you are being put into positions where you might be at higher risk. Who knows? But it's not like there's a supply issue at stake here.
Is it a mistake that there's not more clear federal guidelines and guidance on who should get these and when they should? And I ask because I know people who work in education who are in their 30s and doctors in their 30s who have or are getting boosters soon, but people in their 50s or 60s who haven't gotten any guidance about it.
Right. Yeah, I think they left. So there's the science, and then there's the limit to what you can say based on the science. And then there's the policy decision, which is that, right now the door is kind of open for people who want to have a booster to have it. So, yeah, it is vague, but they have been as clear as they can about what the science supports. And I agree, it's vague, but nobody is going to be, I think, prohibited from getting a booster as long as they're 6 months out from their 2nd shot.
All right, that's good guidance, because we were really wondering about it. Hey, how often there's been some great research that our team has done about the next wave, the 4th wave, COVID-19, the immune escape variants. How many conversations are you guys having at Hopkins about that? And just got about 45 seconds.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, everybody. Tim's been dreaming about Dave Wilson. I'm just going to tell you.
I'm
not going to tell you why.
No, I think the dreams are about, going to Bruce shows, and meeting Bruce, and, sometimes Dave makes
some good REM sleep, huh? Some good REM sleep.
Needs a good night's sleep, yeah. Someone said you're never supposed to talk about your dreams out loud.
Why?
At work.
Oh, really?
Yeah, just, it gets awkward very quickly.
You did it.
Yeah, I know I did, with Dave right here.
All right, we're going to talk to Dave Wilson and get his chart of the day and song of the day in just a moment. Charlie Ballot, what have you been dreaming about?
Tim Stanovic.
Oh, nice.
Here's what's going on. We have got the Dow, the S&P, NASDAQ all advancing. 28 minutes to go ahead of the closing bell. Here's stocks higher. Key takeaway, off-session highs, but nonetheless, we got ourselves a three-day rally. In fact, biggest three-day gain since April. S&P up 46, up 1.1%. The Dow up 402, up 1.2%. And NASDAQ up 190, higher by 1.3%. 10-year yield 1.56%. Spot gold down 0.4%, 17.56 the ounce. And West Texas Intermediate crude up 1.7%, 78.73 a barrel. Equities higher, bolstered by progress on debt ceiling talks and easing concerns about Europe's energy crunch. Pfizer and BioNTech are seeking approval from the FDA for its vaccine to be administered in kids between the ages of 5 and 11. American Airlines telling its employees to get fully vaccinated by November 24th, or you've lost your job. Now, what about mask mandates as the country's COVID numbers appear to be heading in the right direction? Dr. David Dowdy is an epidemiologist at the Johns Hopkins Bloomberg School of Public Health.
Well, I think right now we're still seeing enough transmission that it's still a smart thing to wear masks. It's more important indoors than outdoors. But I think we're still in a place where we need to be keeping those masks on.
Dr. David Dowdy with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking the vaccine stocks, they're all higher right now. Pfizer up 1.8%. Its German partner BioNTech up 4.9%. AstraZeneca's ADRs up 0.8%. Moderna out of Cambridge up 3%. J&J Johnson & Johnson up by 1%. Recapping, S&P up 46, up 1.1%. I'm Charlie Pellet. I like dreaming. That is a Bloomberg Business Flash.
Thank you so much.
Who doesn't?
Thank you so much, Charlie Pellet. This is Bloomberg.
I believe the answer you're looking for is Blind Faith.
Thank you, Blind Faith. Steve Winwood.
Right. And song?
Higher Love.
Indeed. Just checking.
Do I go to the bonus round for that? Do I get to be in your dreams? No, I'm sorry. Let's not go there.
Good idea. Let's not go there.
And folks,
you get to do this again tomorrow.
Folks, if that sounded weird, just rewind your digital tape and you'll understand where this was coming from.
It all
fits together.
Yeah.
All right, Dave, what do you got?
Oh, goodness. Let me save you all from yourselves and talk about earnings estimates for the S&P 500. You go back in the pre-pandemic era, and you would see that analysts would cut their projections during the quarter. Think about it as setting a lower bar so companies would have an easier time crossing it when their numbers would actually come out.
Manage it, right?
Yeah, that's what we're talking about. The last 5 quarters, though, in the pandemic era, it's been a whole different story because analysts have raised their estimates during the quarter every time. And the third quarter, you saw an increase of about 4.5 percentage points in terms of the earnings growth that analysts were anticipating for the quarter. They're now above 28%, by the way, based on the projections we've compiled here at Bloomberg. So what we're talking about, yeah, it is. Wow. But beyond that, the 5-quarter streak is the longest since 2005. And the reason I know that is because the data that we use to track these quarterly changes goes back to the fourth quarter of 2004. And that's when a 5-quarter streak began, just based on the data we have. It might have been even longer, in terms of the history. But in any case, it shows you how exceptional the past few quarters have been when it comes to analyst projections.
So does that mean, Dave, that if we do get, like we've gotten earlier this year, some just blowout numbers from companies for the third quarter of the year, that potentially the stock won't move significantly because that's expected?
That's certainly a piece of it, but think of it this way, more emphasis on the outlook, perhaps, than the past performance, which tends to be the case a lot of the time anyhow. But the basic idea that, people have been getting more optimistic over time, so they expect just that much more out of the companies, not just for the past quarter, but for the quarters to come, and maybe the years to come, because we're almost getting to that point in the profit cycle, you might say. And the real question is whether companies are going to be able to deliver.
I'm also curious if they can deliver on the top line.
Well, there is that, absolutely, and we've seen more and more companies as a percentage of the S&P 500 be able to do that as well. Certainly, it's been the case on the bottom line when you think about numbers in the mid to high 80% range, which we've seen the last few quarters. So even as the numbers have gone up, companies have increasingly beaten those numbers when their results come out. So, at some point you would think something has to give. And the question is whether, the earnings season to come will be that sort of transition.
Makes me wonder, are they managing really well? Or is the street just too low and they're missing something? I don't know.
It's a post-pandemic sort of situation at this point, I suppose. And that's really, as much as anything you would think, what's complicated the process of setting estimates is, people just don't have anything to compare against. We haven't seen a pandemic like this for some time.
Right.
Well, if you've thought to yourself...
Well, I haven't seen it in my lifetime.
Yeah, exactly.
Wait a minute.
Well, earnings season starts in just a few, so we can, already start thinking about that. Hey, Dave, give us your stock of the day.
That would be Pinnacle West Capital. This is the owner of Arizona Public Service, a utility. Ticker is PNW. And they've been going back and forth with regulators in Arizona for a while in terms of their rates. Now, they've been looking for a return on equity of 10%, which is pretty much in line with what they've had the past few years. Regulators had suggested 9.4%. The consumer groups were talking 8.7%. Now the commission has come out and proposed the consumer's number. So you're talking about a drop in their returns. Guggenheim lowered its rating to sell from buy on the stock in response to this recommendation. So, you can see, let's face it, utilities are dependent on regulators to set their rates, to set their returns, and it's not going Pinnacle West's way, and the stock is down more than 8%. It's already fallen to its lowest price in a year and a half.
Down 22% from the recent high back in June, so a big move down.
Absolutely.
Check out Dave's Stock of the Day just after 4:15 p.m. Wall Street time on Facebook, LinkedIn, and on Twitter at @TheOneDave. Thanks, Dave.
And you might end up in Dave's dreams. Who knows?
I've never been hear the end of that one.
Let's go to World and National News and Nancy Lyons. Hey, Nance.
Hey, Carol. Transportation Secretary Pete Buttigieg is warning that supply chain bottlenecks that are threatening the delivery of Christmas gifts to consumers could take years and years to address. But in an interview with Bloomberg, he says the Biden administration is taking short-term action in hopes of easing the holiday crunch.
Some of this is a bigger picture, longer-term issue that's going to take years and years to address. It goes to the very foundations of how our trade works. But what we're seeing is that piled up next to an issue created by the recovery from the pandemic.
Buttigieg tells Bloomberg part of the problem is consumers are opting to spend their money on goods right now rather than on experiences, and that has added demand, which has caused some of those bottlenecks. More charges are possible in what prosecutors call a, quote, widespread scheme to defraud the NBA healthcare benefit plan. 18 former pro basketball players have been charged with defrauding the plan out of approximately $4 million. U.S. Attorney Audrey Strauss shared more details.
One former player, Terrence Williams, was the scheme's linchpin. He provided the other former players with false invoices for medical and dental procedures that they never received.
Strauss says many of the co-conspirators paid Williams kickbacks. 2 environmental factors might be linked to an increased risk of heart failure in women. A new study published in the Journal of the American Heart Association says prolonged exposure to road noise and common air pollutants seem to have an impact on the heart's ability to pump blood. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. This story, it is among our most read stories on the Bloomberg on this Thursday. It has to do with an ex-Morgan Stanley banker who cleaned houses before his startup took off. Cool story.
Yeah, it's really interesting. I mean, people love these like origin stories and really just understanding how a company is built. John Lee cleaned houses in South Korea for 6 months after leaving his job at Morgan Stanley back in 2014. As a hospitality management graduate from Cornell, the now 33-year-old entrepreneur had a bigger goal in mind. He wanted to get a foothold in a business that he thought was ripe for change, so he started out providing housekeeping services to Airbnb homes in Seoul.
He says in an interview with the South Korean, in the South Korean capital, I should say, I had to experience it for myself. Housekeeping is at the bottom of the hospitality pyramid, and it was a way for us to enter the industry. So today, the company he founded, H2O Hospitality, offers a one-stop management service to hotels, resorts, and vacation homes in Japan, South Korea, and Thailand. It raised funding last month, an evaluation of $180 million, according to Lee. And what they do is they manage some 12,000 rooms in 3 countries, and it's looking to double that.
Yeah, it's aiming to more than double that by year end as it wins business from hotels that have been struggling to make ends meet during the pandemic. So here's how it works. If a hotel outsources its operations to H2O, it can cut its fixed cost by as much as 50%, Lee said. The reason, he said, is because his company uses more advanced ways of operating, like online check-ins, smart locks, and chat-based customer service, all of which can cut costs.
So basically becoming the operational part of these hospitality locations, right?
Yeah, I mean, if you don't have to pay people to do this stuff, then you don't have them on your payroll. You don't have to pay benefits for them. I mean, it changes country by country, but that's one way to think about it.
Yeah, I mean, cutting fixed costs by as much as 50% for a hotel in terms of operations, that's pretty significant. I agree. I love these stories. Anyway, you can check it out. You can read the entire story and get some more of his thoughts. You can find that story at Bloomberg.com and also on the Bloomberg terminal. This is Bloomberg Business Week, and you are listening to Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We've got the Dow, the S&P, NASDAQ all holding on to gains. S&P on track for its biggest three-day gain since April. 13 minutes to go ahead of the close. The Dow up 359 now. That is a gain of just about 1%. S&P up 39, higher by 0.9%, while NASDAQ is up 163, up 1.1%. 10-year down 15-30 seconds. 10-year yield 1.57%. Spot gold down $7 the ounce, down 0.4%, 17.55 on gold. Bitcoin down 1.6%, 54,052 on Bitcoin. Crude moving higher. West Texas Intermediate up 1.8%, 78.80 right now on WTI. Natural gas up 1.6% now, 576 per million BTUs. Again, recapping a rally underway. Stocks higher. S&P up 38, up 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Pressure on the world's big fossil fuel producers to clean up their act appears to be having an effect. Mining companies have rushed out of coal, and oil giants are planning to sell billions in assets. Unfortunately, it's becoming clear that green-minded asset sales aren't all they've cracked up to be. While sales of fossil fuel assets grab headlines, they don't close coal mines or oil wells. Instead, they increasingly shift dirty assets to a shrinking pool of buyers, niche players, private equity firms, and state-owned entities that are under less pressure to be transparent. Divestment, in other words, often looks like climate arbitrage, as companies clear their portfolios of risky assets and shift their problems to others. Investors and regulators need to start asking tougher questions. Without better safeguards, encouraging fire sales risks undermining the world's climate goals. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Yes, indeed, Friday's Eve. I forgot to say that at the beginning.
Well, that's because your mind is still thinking that, Thursday's the new Friday.
I'm working on that with the team. Suggestion box. Watching the market trade, you heard Charlie say that we are coming off our highs. We're definitely have moved down in the last hour or so, but still higher when it comes to those major equity averages. So let's get to it. Charles Lemonides is founder and chief investment officer at the investment manager ValueWorks. They focus, as you would expect, on a value discipline. He joins us once again on the phone in New York City. How are you?
Very good. Thank you very much for having me.
Well, we have seen some interesting market gyrations. There's definitely a bit more volatility back into the market, but we have seen, 3 days of gains now on the S&P 500. What's your outlook here, Charles?
Yeah, we've seen 3 days of gains, but we've seen a really rough September coming into those 3 days of gains. So, my view is that the past month and a half, we've sort of consolidated the big upward move we had earlier in the year. Markets have been sort of churning at these higher levels, giving back a little, and now maybe making a push to new highs. Look, it was really important to have the noise out of Washington toned down a little bit. As we get close to debt ceiling and these budget crisis moments, the markets tend to stall. We pushed that off a little bit, and now investors can start focusing on what's happening in the real economy.
What is happening in the real economy? I mean, we get the jobs report tomorrow. Economists expecting 500,000. That would look pretty good.
That's right. And, that's a big number for us. We're going to care about that a lot, and it means a lot. And then right after that, we're going to start hearing a lot of earnings releases from companies. And this summer was very interesting because things were really percolating along very, very well for the economy until sort of mid-late August and into September, when the impact of what was happening in the COVID crisis and the Delta variant really hit the economy. And you saw that in some retailers' results that have already come out so far. But we're going to hear a lot more from companies, as earnings releases come out next week and the week after, talking about whether that was a 6-week bump in the economy and whether things are already re-accelerating, which I sort of think is the most likely case, or if that little bit of a slowdown is broadening out. My sense is that we're seeing past the worst of the Delta variant disruption to the economy. And so I think you could be hearing from companies next week and the week after that earnings for the last quarter were good, that inflation is picking up in their businesses, that there's a lot of demand and there's a lot of growth in front of us.
Of course, until the fourth wave happens, and then we get those variants that the vaccine. Sorry, I don't mean to be such a bummer, but
well, you are.
Our Sam Fazeli, really smart, writing about this. I'm sorry.
I know.
What do you? I mean, Charles, do we need to think about that, or just deal with it when and if it happens, and hopefully it doesn't?
We do need to think about it, but 2 years ago when this all started, there were people saying, hey, sometimes these pandemics go on a couple of years.
Yeah. Here we are.
And here we are 2 years in. And, maybe this is the end of it. I mean, look, I've been thinking it was the end of it for, 6 weeks in front of us for the past 2 years. So, it may or may not be.
It's like working with a contractor. I'll be done in 6 weeks. I'll be done in 6 weeks.
Well, I do, though. I do wonder, we talk a lot about the quote-unquote new normal. And at least the way that I'm thinking about it, a lot of my friends are thinking about it, we're learning to live with it. And it's not great. Like, I don't like, getting my son tested every week and, waiting in line to do that. But we do that and then we go on with our day. And we continue to buy things and we continue to go visit friends and we're careful. But we have adapted. And I think people have adapted and they've adapted their spending habits as a result. I think the question is, do they get back to work? And do they go back to work?
And that's where 500,000 jobs, in the month of September would be an interesting data point. I think the answer is yes. The other thing that we've seen that's been very, very concrete is that economic demand for goods and services has been pretty robust.
Mm-hmm.
It's not because we are or aren't impacted by the COVID epidemic. It's because we've had a tremendous amount of stimulus from the federal government, both in monetary and fiscal policy. So, we've got dollars in our pockets and we want to spend them. And, the challenge for companies is being able to deliver the cars that we want, the boats that we wanted over the summertime. And so you're seeing pressure on all sorts of costs. And you're probably going to see a lot more of that in the weeks ahead in these earning results.
So, Charles, if we get that 500,000 print on non-farm payrolls tomorrow, that would be a strong indicator of the strength in the economy and jobs coming back. At the same time, it would also lend more support to the Fed easing back when it comes to asset purchases, and maybe, at some point they'll start to think, get more specific about when rates start to go higher. How might, though, a strong jobs report translate into the equity trade tomorrow?
Well, your point is a very, very good one, because that's exactly what is on everyone's mind. Will the Fed be as accommodative as they said they're going to be? Or will they again, start tightening conditions a little too quickly? They've been telling us that they're going to stay loose for long, and I am inclined to believe them. I think the Fed is likely to let this economy run really hot for, another year or so before they, at all start to pull in the reins.
Yeah.
And in my experience, it takes a couple of years before Fed tightening actually hits the economy.
It's a good
the
point.
stock market reacts to news of Fed tightening really fast, but what tends to happen is that the economy continues to move aggressively expanding, and so then the market catches up to the economy, and it takes a couple of years for Fed tightening to slow economic growth.
Just real quick.
So I think we could have economic growth for 4 more years. Sorry.
Well, just real quick in the last 30 seconds that we have, how hot do you think the Fed is willing to let the economy run? Steve Mnuchin telling our own David Weston earlier today that he's worried this is going to be ongoing inflation. We could end up with 3.5% 10-year treasuries.
Well, look, if that happens, you better not be in treasuries and you better not be in cash. So I guess you better be in equities. You know, if that's the environment we go into, you know, I think you get a 20% return on equities next year. And I think that's a very, very real risk.
Yeah, it's all timing and how this all plays. And as you said, Fed policy has a delayed impact, but certainly investor psychology about what the Fed may do, even if it's not actually happening, can certainly also impact the trade. We've seen that before. Hey, Charles, thank you so much. Charles Lemonides, he's founder and chief investment officer at ValueWorks, on the phone in New York City. Just a few minutes left in today's trading session. We've taken a leg down over the last hour, still up about 0.8% on the S&P 500, up almost 1% on the Dow Jones Industrial Average. NASDAQ still higher by about 1%. Ooh, just taking a little dip into or up to that 1% gain. So we are seeing holding on to some gains, but again, we're off our best levels of this session. All right, folks, let's get ready. We're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Gina Martin Adams sitting in for Taylor Riggs today, counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. Carol Massler, Tim Stenovec, bringing together all of our audience across Bloomberg Television, radio, and YouTube. And Carol, it is a rebound. We're not necessarily at the highs of the day, but I think a lot of folks will take it.
Yeah, absolutely. Certainly if you're bullish on this market. If you're trying to short, you're also having some complications here. But what, up 3 days in a row on the S&P 500? I've been watching the NASDAQ Golden Dragon Index. We have seen a real bump up overnight in Asia and certainly into the U.S. trade. That index is up about 5.5%. So once again, investors, Tim, moving into that area.
We did see stocks pull back a little bit later in the session. This on news that China plans to tighten its supervision on tech companies. But still, you have, more than 3 companies higher in the S&P 500 for every 1 company that's lower, Caroline.
Yeah, meanwhile, there was heavy trading yesterday. Today, the volume's a little bit lighter. We're off by about 4% on the S&P 500 versus your usual 20-day average, down more double-digit on the NASDAQ. But still, you take a gain, Gina.
Yeah, and how about the sector performance? I think the industry and sector performance is one of the more fascinating things that's happening today. Financials really left out of this conversation. Yet bond rates still going higher. What's happening with financials and why are they not participating? What does that mean about the outlook?
And I feel like this is always a story with financials. It seems like every time financials should be rallying, they don't rally yet. Somehow, we always end up having this conversation here. We should point out transport's also a little bit weaker here on the day as well. So I guess it kind of raises the questions of just how much of this is a commitment to that reflation trade. All right, getting the closing bells here in New York, the clapping, the bells ringing, the Dow Jones Industrial Average up about 340 points, almost a percentage point here on the day. The S&P 500 off the highs of the day, now slightly below that 4,400 level, 43.98, of course, as we wait for these numbers to settle. But right now, that's going to be good enough for about an 0.8% gain on the day. The NASDAQ Composite up about 1% or 152 points. The NASDAQ 100 slightly lower, up about 0.9%. The transports are going to finish the day in the red, though you did see a bid come back into the Russell 2000 today. Relative outperformance, 1.6%, 2250 right now on the Russell 2000, Carol.
Yeah, and I've been just looking at some of the technicals. The S&P 500 back above 90-day today, that 90-day moving average, still below 50-day, but watching very much these trend levels to see whether or not we are seeing, investors coming increasingly into the market to provide some support, or whether we continue to see that trend line, that technical trend line, moving a little bit lower, Gina.
Yeah, and also I think you want to really pay attention to these industry trends. When you're looking at the GRR on the Bloomberg terminal, you can see pretty clearly that, the materials industry is definitely doing very, very well. What's at the bottom, though? Why are airlines not participating? Why are these sort of return to normal groups not really driving the growth? I think it's really reflective of what investors are willing to buy, and they're only buying what was beaten up most, not really any strong thematic sort of gumption behind this rally evidenced in the industry trends.
Yeah, that's a really good point. So you've got the groups on the move. I'm going to take a look at some of the gainers in the Thursday trade. Levi Strauss, really an outperformer
performer, an iconic brand. They've been around forever, more than 170 years or close to it. Up 8.5% in today's trade, 26 and change at the close. Third quarter sales topping Wall Street expectation. Consumers are still shopping for apparel despite some of the questions that are still out there because of COVID. Company also boosted its full-year profit outlook, authorized a $200 million share buyback program. We talked with the company's CEO earlier on air, and he's, talking about managing that supply chain. It's not easy. They've got it spread around the globe, but also when it comes to inflation, he thinks some of that's going to stay with us for a while. Peloton, top in the NASDAQ 100, up almost 5% today. Rival iFit Health and Fitness postponing its IPO amid market volatility. They specifically cited unfavorable market conditions that have investors worried about growing volatility in capital markets. So that's an interesting twist in terms of what's going on in new issuance. And NetEase and JD.com among the Chinese tech names in the NASDAQ 100 that were trading higher. I'm going to mention Alibaba because it was up 8.3%. Maybe it's the optimism that U.S. and Chinese officials are going to get together, Biden and Xi specifically, before the end of the year. But really, Tim, a big boost in those Chinese names.
Well, it was kind of slim pickings, at least earlier in the day, when it came to decliners and companies that were making big moves lower today when so much of the market moved higher. But Carnival Corporation, it did finish the day down by more than 1.6%. Late yesterday, after the market closed, the company announced that its Carnival Cruise Line plans for more ship restarts for January and in February. The company does have the goal of getting its full fleet sailing from U.S. home ports next spring. It's got 17 ships that are scheduled to be operating by the end of this year. American Airlines, you heard Gina Martin Adams talk a little bit about this, down 1.8% today. The company under pressure after that Goldman downgrade we talked about yesterday, but also saying that workers must be fully vaccinated by November 24th. Workers can request medical and religious exemptions. The company didn't say what portion of workers are already vaccinated, but did say the majority of them were. And then also Pinnacle West Capital Corporation, it's a subsidiary. Its subsidiary provides electricity to most of Arizona. It fell the most in 18 months, this after regulators moved to cut the return on equity. So some tension between the company and regulators there in Arizona when it comes to the electricity provider.
Meanwhile, let's talk about move from electricity into the world of commodities right now. I'm looking cross-asset, and actually we got the bounce back in oil today after we'd seen significant sell-off yesterday. WTI crude up 1.9%, $78 is where we trade Brent crude at an $82 level. Now, this is as the U.S. seems to be pushing back against, yes, there's price increases. Yes, you're worried about the price of your gas at the petrol station, but they're not going to alleviate the issue. They're not going to turn on the taps themselves from a U.S. government perspective. They're going to just try and push OPEC Plus to perhaps boost production. So they seem to be therefore pushing up higher as we weren't seeing an injection of supply coming from the U.S. government level. Interestingly, we saw gas, natural gas in America push that a little bit higher, but very different question when you see over in Europe, actually that issue about the gas price rally that we've seen of late actually dampening down by about 10% after we see Russia, Putin again saying, look, I could be here to alleviate your issues, but maybe Nord Stream 2 you've got to take a quick look at. Big moves in commodities, big moves in FX. In fact, of course, as we see oil rally, as we see some of the metals push back, Aussie dollar up 0.5%. We see that as we have perhaps a little bit pulling back in the overall nervousness in this market. Instead of going for your Swiss franc, your yen, and your US dollar, you're actually getting more into your commodity-related, your more risk-on kind of currencies. The Canadian dollar does well on the back of oil. Sovereign bonds as well. We actually see yields move higher if you're looking in Canada or Norway. Perhaps less of a haven trade bid as well, Romain.
Yeah, you got to start synchronizing your watches 16 and a half hours away. You're going to get that job support. A lot of activity in the Treasury market ahead of that here. You're looking at 2,100 right now, or excuse me, I say 210 right now on the 30-year yield right now, back up to those June levels. Don't want to scare anybody. We haven't quite gone back to the 1970s just yet. 156 right now, 157, call it if you want to round higher here on your 10-year yield here. And you have a lot of folks now talking about, and I think you touched on this earlier, Caroline, about sort of what's the jobs number that really sort of jolts folks out of the trend line here. Is it a number that's somewhere lower, down around 200,000, or is it somewhere higher above that 500,000 average of economist estimates out there right now?
I think that's exactly, who is it? Padraig Garvey over at ING was exactly saying this is a great story across the Bloomberg terminal, saying, look, you have to massively miss, have to put in a number about 200,000, which is less than half of where the market consensus is, if you're going to move yields significantly lower again, if you're going to start stopping that tapering train. For now, given ADP numbers, given, of course, the jobless claims we saw today, it feels pretty bullish right now, Carol.
Well, and job market, it's all about it, and we'll get that monthly read at 8:30 a.m. Wall Street time tomorrow. You mentioned weekly jobless. They did fall more than expected last week to the lowest in a month. We had a headline just crossing Williams-Sonoma, increasing minimum hourly wages to $15 an hour. We know a lot of employers are paying more, so it'll be curious to see if that shows up in the balance sheet in terms of higher costs for all of them. But again, another data point, right, guys, that shows the economic or the economy is moving towards recovery here.
Right. And what does labor force participation look like in the numbers tomorrow? What does wage growth look like in the numbers tomorrow? Gina, I know this is something that you and I talked about earlier in the day, and that's a number that you're going to be watching really closely.
Yeah, average hourly earnings, I think, are sort of the hidden risk in the employment report. We've talked a lot about what would slow the Fed. What we haven't talked about is what would make the Fed speed up. And I think that's probably the bigger risk, is that the Fed is forced, their hand is forced to speed up tapering and interest rate tightening, reflecting really tight labor conditions and high wage costs.
Interesting is, of course, we know President Biden is speaking on vaccines, potentially vaccine mandates. He's currently saying that the Labor Department rule on the shot requirement is coming soon. So it's interesting as we get more vaccines in arms, as we talk about boosters, we talk about school kids getting vaccinated as well. This all just speaks to us being able to get back more normality in the workforce.
Yeah, I mean, we didn't touch on it, of course, but there was that big announcement earlier today about potentially providing shots for 5 to 11-year-old kids here. Some folks celebrating that as sort of another sign here that gets us back to normalcy, guys.
Well, and do I dare bring up the fourth wave? We know our Sam Fazeli writing about this. This is something, do we need to be concerned about a variant at some point that isn't protected by the vaccine or dealt with by the current vaccine, Tim? And that's something that we think about a lot.
Yeah, well, I certainly hope not. I mean, I'm not getting past the third wave at this point, although we are hearing from the president that 25% of Americans eligible for the shot are unvaccinated, and hospitalizations are down now by 25%.
All right, that's going to do it, guys. For our Beyond the Bell coverage, our cross-platform coverage on radio, on TV, on YouTube, we'll be back again for Jobs Friday, same time, same place, to walk you through the close.
And we are...
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovec on Bloomberg Radio.
I think we're all a little tired.
I think so, too.
I really felt it. I think it's been really dense, a lot of issues. Feels like we're making some progress on some stuff, but...
It does.
It's a lot.
Hey, I wanted to get to some headlines from President Biden, who's speaking right now. COVID hospitalizations down 25%. COVID cases in the U.S. down 40% this month. Look, they were coming from a very high place, regularly each and every day, over 100,000 new cases, but still some good news.
Yeah, Labor Department rule on a shot requirement coming soon. Says unvaccinated Americans put the economy at risk. And this is something I do wonder whether we're going to start to get more clarity and guidance when it comes to booster shots, maybe for those that aren't above 65, for those that aren't at risk. He also says vaccination requirements boost the inoculation rates. There you go. Carrot, stick.
That's the question, right?
Exactly. Hey, folks, we've got some great stuff coming up. We're going to talk about a really popular series on Netflix, and then we're going to talk with a former CEO of Unilever. Can't wait for this.
In the meantime, let's get to check the latest world and national news. Nancy Lyons is standing by in D.C. Hey, Nance.
Hey, Tim, it is unclear when a vote will happen, likely sometime this weekend, but Senate leaders have announced an agreement to extend the government's borrowing authority into December. But as Bloomberg's Washington correspondent Joe Matthew explains, this is just a temporary fix.
Here, but we're going to come back all over again in December. This would lift the debt ceiling, to be clear, by about $500 billion, little less. And that would bring us to December 3rd. Something else happens that day. That's when government funding runs out. We just had that deal passed recently. So there's going to be another collision of deadlines. And at that point, it's likely that Senate Minority Leader Mitch McConnell will sit back and enjoy the show.
Joe Matthew hosts Bloomberg Sound On that airs here on Bloomberg Radio every weekday at 5 p.m. Wall Street time. A new Senate report released by Democrats on the Judiciary Committee details Donald Trump's extraordinary effort to overturn results from the 2020 presidential election. It finds in pursuit of his fraud claims, he brought the Justice Department to the brink of chaos and prompted top officials there and at the White House to consider resigning. Senator Dick Durbin chairs that committee.
Former President Donald Trump would have shredded the Constitution to keep his office in the presidency.
Durbin says Trump repeatedly pressured Justice Department officials. Republicans have issued their own report that downplays the concerns raised by Democrats. Well, 4 of former President Trump's former aides have a deadline today to turn over records and agree to testify on the insurrection. Trump, though, is instructing them to defy the subpoenas, citing executive privilege. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic. Food inflation heating up. Energy crisis may make it worse, although we did see some alleviation in some of the energy markets today because of possibly Russia's Vladimir Putin helping us out there.
Okay.
But anyway, I think this is going to be a huge story.
Yeah, you're talking about the jump in global food prices to a decade high. It risks leading to even more expensive grocery bills. The energy crisis you mentioned, Carol, it's threatening to make things even worse. Inequality, too.
I did a panel for the Milken team earlier this year, and it was with incredible supermarket food providers, somebody actually from Unilever, who we're going to be talking to, a former CEO of Unilever in just a moment, but just talking about waste within the food industry. And I do think because of the impact of food waste and what it has on our environment, food in landfills, what it does, food production, whether it's meat production, cattle, we talk about this all the time. We, I think as a society, are increasingly going to have to look at this and how do we do it smarter. And the other thing is there's more people, and we've got to learn how to feed them.
We do.
We don't feed them already.
There are so many problems. You're seeing also some entrepreneurs use it as an opportunity to create what's called upcycled products.
Yep.
So taking waste and actually creating food from that waste. You're seeing more and more of that. The thing is, I would imagine right now it's a very small portion of the food that's actually wasted, the food that's thrown away, because this is food that's, you know, in an industrial process is left for scraps. They're able to save those scraps and then create new products from it.
But I just think in terms of production, like we know that there's a lot of food produced that never actually gets eaten.
Yeah.
And so what do we do to fix this out, do this? But, you know, the energy crisis, there's a lot of fuels, right, that go into fertilizer and different things. And so this plays into the food cycle and the food availability.
Yeah, it's reminiscent of the price spikes that we're seeing during the food crises of 2008 and 2011. The energy rally that we've seen, it could also prompt more crops to be diverted from food to making biofuels. So instead of feeding people, it's used for fuel because fossil fuel prices have become so expensive.
When we were all in on corn-based ethanol, saw a lot of that going on way back when. All right, you're listening to Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 index up for a third day, led by consumer discretionary shares. Equities higher, bolstered by progress on debt ceiling talks and easing concerns about Europe's energy crunch. S&P did climb as much as 1.5% before nearly halving gains on China's plans to tighten its supervision over technology companies. So the S&P ended the Thursday session up 36 points, up 0.8%. The Dow ahead of tomorrow morning's jobs report up 337, up by 1%. NASDAQ up 152, up by 1%. 10-year yield right now 1.57%. Bitcoin down 1.7%. 53,990 on Bitcoin. Gold down 0.4%, 17.56 the ounce. And West Texas Intermediate crude up 1.9%, 78.86 a barrel. An update for natural gas advancing by 1.3%. Williams-Sonoma is increasing its minimum hourly wage to $15 an hour. Williams-Sonoma shares up today by 3.5%. Again, recapping, S&P up 36, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie, you watching Squid Game?
I'm not.
You're the only one.
You know, I spend so much time watching stuff on YouTube, weird stuff. But as my coworkers will attest,
we're gonna cut you off before this gets.
No, it gets. I watch fantastic stuff like boats in the Mekong Delta in Vietnam. But that's another conversation for another time.
Charlie, you're one in a million. All right, everyone is watching this though on Netflix, and we're talking about Squid Game, right? Although I haven't started watching, but it's on my list.
Well, it's I think for a tough thing for a lot of people to swallow. The episodes are long. It's pretty gruesome, but it is really, really good. My wife and I are 3 episodes in, and I think, Tara LaChapelle, it's the top show in 90 countries that Netflix operates in over the weekend.
Yes, I mean, they're saying it could be their biggest show ever. It's certainly their biggest foreign language show ever. So
biggest show ever?
Yes. Yep.
That's wild considering the hits that they've had.
And considering how dark and disturbing this particular show is. I mean, so many people just can't wait to watch it. Everyone has FOMO. They want to see it.
Well, that voice you hear and recognize is Tara LaChapelle. She's entertainment, telecommunications, and deals columnist at Bloomberg Opinion. We were eager to get her on the show this afternoon because she writes about the streaming wars and that Squid Game isn't necessarily for Disney because of the aforementioned themes, but that's a problem. Take us into it, Tara.
Yeah, so I think, Disney Plus obviously has a lot going for it. Disney has some of the best intellectual property there is in Hollywood. They have Marvel and Pixar and Star Wars, but there's not a whole lot of adult content on there. Think of something like Squid Game, but also The White Lotus, which was very popular over the summer on HBO Max, Mythic Quest on Apple TV Plus, Ted Lasso. These kinds of programs just don't really fit Disney's kid-friendly environment, right? And I think that's kind of a weakness for Disney. It's a strength in many ways. Every parent needs to have Disney Plus at this stage, but at the same time, it means it's not a really complete offering for a lot of households. They own Hulu. Walt Disney Company owns Hulu. They control that asset. I think it would make a whole lot of sense to make Hulu and Disney Plus one app. Instead of having them 2 separate services where you're trying to keep track of what's on what service and having to toggle between them, it's just very messy.
That's not that crazy of a thing because I'm a streamer. I watch a lot of things. We stream a lot. And you open the Disney Plus app and you can choose Marvel, Pixar, Lucasfilm. And it wouldn't be that crazy to think that Hulu could be one of those boxes there.
Exactly. And internationally, it looks a bit like that. So in other markets, in other countries, they have the Star brand, which is kind of their answer to Hulu outside of the U.S. And it's a general entertainment brand, and that's where they put that content. It's very easy, like you're saying, make it one of the tiles on the app. I think put some parental controls around that, some password protection, because obviously it's really important to Disney to keep their app kid safe. But I think it would be really easy to put all of these assets together. And wow, when you put Hulu and Disney together, that starts to look a lot like Netflix, maybe even better than Netflix.
Well, talk to us about that. Because Hulu, the original idea, right, was pulling content from like the major networks and so on and so forth. What is Hulu today?
I mean,
I use it, but I feel like it's a mix of a lot of stuff.
I think I don't know either. I think that's the problem, right? I think Hulu has become really just a confusing product. It has some really great stuff, obviously, Handmaid's Tale. And like you said, it gets a lot of good content from other studios, but I think Disney doesn't really know what to do with it right now. And if they do, they haven't really articulated it very well. I think that some of that stems from Hulu used to be owned by all the different big media giants. So they have this hodgepodge of ownership, and I think that really affected the ability of this service to really take off because you had so many chefs in the kitchen.
You still have another chef in the kitchen too, though. Isn't Comcast still involved?
Yeah, so Comcast still owns a stake. Disney has kind of like operational control at this stage, but having Comcast own a piece of Hulu really complicates what Disney can do next. It also means that if Disney wants to buy out Comcast's stake in Hulu, it's getting more expensive each day that they wait to do it because this is becoming more valuable of an asset, and Hulu just turned a profit last quarter. So, I think they're just in a tough position right now, but to me, it makes sense to just act quickly and really just like tidy this up at this point.
So what do analysts say is the long-term goal of Hulu, and what will Disney actually do with Hulu?
I think more and more people are coming around to the idea that somehow these assets all become one, that you have one service and that makes more sense. But, it's hard to do for other reasons beyond just the nature of the content. It's also the fact that Hulu makes its money from advertising and Disney Plus doesn't have commercials and ad interruptions. So there's all these things they'd have to work out. It's not very easy to, slap them together. But I think eventually we get to that point where, why is Netflix so popular and why is it so great? It's simplicity.
Because you do wonder about what content Disney is potentially passing on, right? That could bring in, because if you look at the subscribers, Netflix is still the outperformer.
They are. I mean, when you put Hulu and Disney together, their number of subscribers gets pretty close. They're probably at, I think Disney had almost 120 million. Hulu has about 43 million. So they have a lot, but it's not a complete product without having that other type of content. Like you said, they're missing out on stuff by not having that. So I think it would be really powerful putting them together. It just makes so much sense, but I don't know when they're going to do it or if they're going to do it, but it feels like more and more people are expecting that from them because they want simplicity. You want to be able to just open up your app, turn on your TV and watch something and not have to go between all these different services.
I'm so frustrated about going through different things.
I talk about this all the time, but I mean, I follow the space really closely, so I know what's on what in general. But sometimes I'm like, okay, we were watching Killing Eve. Is that on? Okay, it's on Hulu. Seinfeld's on Hulu. No, Seinfeld just went to Netflix. Yeah. Peacock has 30 Rock now.
And Handmaid's Tale was initially...
Well, what's funny about MGM made Handmaid's Tale, and now they're going to get bought by Amazon. So it shows you just, how complex this could really get and trying to keep track of who owns what. I think at the end of the day, people just want something simple.
Yeah, and they want Squid Game, no doubt about it. Tara LaChapelle, love her, entertainment, telecommunications, and deals columnist at Bloomberg Opinion. Find her on Twitter.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I've been looking forward to this. Paul Pullman, he's the former Unilever CEO. He was there from 2009 to 2019, so 10 years. He's got a new book out. It's called Net Positive, How Courageous Companies Thrive by Giving More Than They Take. We have a slew of questions for him.
Yeah, looking forward to talking to him about what role businesses take in fighting inequality, fighting climate change, and whether or not there's room for the government to be there to help. If the government is the one with the power to do this.
Yeah, exactly. Policy really can bring about change. All right, so much to get to. We'll get to him in just a second, but first up, back to Charlie Pellet. Hey, Charlie.
Well, hello there, and I thank you very much. Here's what's going on. Equities higher today. We had the Dow, the S&P, and NASDAQ all advancing. S&P, look at that, rallying for a third day, led by consumer discretionary shares. S&P up 36 today, a gain of 0.8%. The Dow up 337, up 1%. NASDAQ up 152, also up by 1%. And today we had Bitcoin slumping by 1.3%. 10-year yield, 1.57%. Gold down 4/10, $17.55 the ounce. Crude pushing higher. West Texas Intermediate up 1.8%, $78.79 a barrel. And natural gas turning around up 1.5%, $5.76 per million BTUs. So it was an update on Wall Street. As for the market backdrop, Charles Lemonides is founder of ValueWorks. He was our guest right here on Bloomberg Business Week.
My view is that the past month and a half, we've sort of consolidated the big upward move we had earlier in the year. Markets have been sort of churning at these higher levels, giving back a little, and now maybe making a push to new highs.
And Wall Street's focus very much on tomorrow morning's all-important jobs report. Sarah House is senior economist at Wells Fargo.
So I think when we look ahead, we are expecting to see some improvements in the labor supply. I think there's been a lot of hype around September and just the calendar turning there between schools being back and the unemployment insurance benefits ending in all states. And I think you'll see some incremental improvement. But these are dynamics and issues that are going to take months to play out.
And just getting word that Microsoft has agreed to let more repair shops fix its devices, caving to complaints from advocates and shareholders about the tight grip that tech companies have over consumer repairs. Microsoft up today by 0.6%. Recapping, 10-year yield 1.57%, S&P up 0.8. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, really appreciate that wrap up. Well, he is the former CEO of a massive consumer products company, well-known brands in the personal care space, food space. I mean, we're talking Dove, we're talking Hellmann's, Lipton, Ben & Jerry's, Seventh Generation, Suave, so many more. Harvard Business Review recently wrote that he first saved Unilever and now he wants to save capitalism.
You had me at Ben & Jerry's.
I know. Don't we? Had everybody at Ben & Jerry's. So nice to have with us former Unilever CEO Paul Pullman. He's got a new book out, Net Positive, How Courageous Companies Thrive by Giving More Than They Take. He joins us on the phone in the UK. Paul, so nice to have you here on Bloomberg. How are you?
Thanks for having me. It's a great opportunity.
Well, and it's great to have you here. You know, first I want to ask you, I mean, you were CEO coming out of the financial crisis. You know, what do you remember of that time, and were you kind of glad not to have to deal with this crisis as CEO of a major global company?
Well, there's so many changes happening right now. We see the speed of change and of the technological revolution and the scale of the industrial revolution. And I don't think it's easy to be a CEO any time in history. But the financial crisis was particularly tough because we really saw a big contraction in emerging markets and big interventions from governments that were needed. But it was clear to me already then that the economic system needed to evolve to something that was more inclusive and, frankly, more sustainable. That's what we set out in Unilever to do already back in 2008. And over the 10 years of my tenure, it has helped us show that business can be done differently, but that it ultimately is also good for the shareholders.
Have you been concerned that the current crisis that we're facing as a global community, the coronavirus pandemic, is going to further set back those goals of being a more equal society, being a more just society?
Well, if I may be honest, even at the financial crisis, we missed an opportunity and people felt that banks were too big to fail and people were too small to matter, and the governments did not really use that opportunity to channel the funds into creating a greener, more sustainable, more equitable society. COVID, again, is a stark reminder, and that we can't have healthy people on an unhealthy planet. And I think it has brought to light the complexities of our system, the biodiversity destruction, climate change, inequality, the racial dimensions, as you've seen, especially in the U.S. And that has put many of these things higher on the agenda of the business community. And the reason for net positive is I think most people understand what is happening now around climate change or inequality and trying to move in the right direction, but collectively we're clearly not moving at the speed and scale, and recognizing the difficulties that we see in many countries in the world around governance or global multilateralism, if you want to. The book would argue that it is in business's interest to step up and fill that void and help de-risk that political process.
How did we get here, Paul? And I ask because look at the macro problems we have right now. You know, inequities, incredible wealth gaps. We're talking about the energy crisis. We're talking about climate and the impact that we've had, and maybe it's just getting too late. The inability to maybe feed everyone. Did companies become too greedy?
Well, it is clear that the current economic system that we've had with infinite growth on a finite planet is really not sustainable, and anything you can do continuously is by definition not possible. So we need to change our economic system and be sure that we pivot it in a way that we take care of planet Earth and also our fellow citizens. And the most existential threat we now have, without any doubt, is climate change. But and the other side of the coin that we've seen is that when we get these issues, now day after day, nearly on television or any other media, it's again the poor that suffer the most. COVID has put us back on the Sustainable Development Goals, probably 15, 20 years. So there is no doubt that we need to work harder. The option of not doing anything and going through a crisis like COVID again at an accelerated pace and more often is simply not an option. I've never really felt that to be reasonable, and fortunately we still have a lot of the opportunities to address it and to figure out something better that would serve us and future generations.
Hey, I want to talk about that something better. We're going to take a quick break. We're going to do some news, and then we're going to come back with you. But really eager, Carol, to hear from Paul Pullman about what that other type of capitalism, that new type of capitalism looks like, because that debate is happening here in the U.S. We see it happening in Washington with lawmakers arguing about what they want social programs to look like.
Right.
What, in his opinion, is the future of capitalism?
And how do we really get the buy-in, especially for publicly held companies who are tracked quarter to quarter and penalized if they don't hit their numbers? How do you make that transition, which we know can be difficult? All right, let's get back to world and national news. Nancy Lyons in our 99.1 newsroom in D.C. Hey, Nance.
Hey, Carol. President Biden is in Chicago to promote vaccine mandates. He spoke at a construction site for Clayco, a company that plans to require vaccines or weekly testing for its employees. Biden says mandates have certainly improved the nation's vaccination numbers.
More than 185 million Americans are now fully vaccinated. More than 75% of eligible Americans have gotten at least one shot.
But Biden says despite that progress, we still have more than a quarter of Americans who are eligible but have not received a shot. A deal has been reached to extend the government's borrowing authority into December, and while a crisis may be averted for now, it may have left a stain on America's reputation abroad.
The political stalemate has damaged America's ability to influence world affairs, Richard Haass, president of the Council on Foreign Relations, said in a Bloomberg interview.
The disarray means we're no longer a model that others respect or want to emulate. We're not predictable. We're not reliable. It raises fundamental questions for those who are dependent upon us for their security. I actually think the greatest threat is not China or North Korea or Iran or Russia. It's ourselves.
Haass, who served in the two Bush administrations, added that why serious centrist Republican senators are following an irresponsible path on the debt issue is beyond his understanding. In Washington, Irv Chapman, Bloomberg Radio.
Senate Democrats are out with an extensive report on former President Trump's efforts to overturn the 2020 election results. Illinois Democrat Dick Durbin, who chairs the Judiciary Committee, says the report shows just how close the U.S. came to a full-blown constitutional crisis. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. I want to bring back in Paul Pullman. Paul, we just have a couple of minutes with you. Then we're going to come back. We're going to do some more news, and then we're going to come back for a longer interview. Paul Pullman is former Unilever CEO from 2009 to 2019. His new book is Net Positive: How Courageous Companies Thrive by Giving More Than They Take. Paul, I'm curious about your path to becoming CEO, because I did read that you were considering becoming a priest. You were in line to be to go join the priesthood, or a doctor as well. I'm curious how that impacted your thinking as a CEO.
Well, I was born in 1956, and I always thought it was a long time after World War II, but it actually was fairly short. And I grew up in a family where my parents were deprived education because of the war. So all they wanted is peace in Europe, the communities to work, ensure that their 6 children got education, and frankly had a better life than they did. So I think at the end of the day, I was fortunate that I had these parents and who put the interest of others ahead of their own, and they firmly believed that they would be better off by doing that as well. So that's how I grew up, and it brought me values of dignity, respect, equity, compassion that I've tried to live my life with. I've always realized that having been born in the Netherlands, I've just been lucky. The government paid for my education. I had a toilet at home. I had some food, so I wasn't stunted. Unfortunately, that's only the case for 5% of the world population that are in that privileged position, and yet they didn't do anything for it. So I won the lottery ticket of birth, if you call it that way. And I've always felt it's our obligation to put ourselves to the service of others to ensure that it can function for everybody. So priesthood, or being a doctor, or now being in business, actually ultimately is the same purpose. How can you have the best impact to help ensure the changes that are needed?
Paul, we're going to continue talking along that vein. Paul Pullman, former Unilever CEO, and his book is called Net Positive: How Courageous Companies Thrive by Giving More Than They Take. We're going to come back with him in just a moment, continue our conversation right here on Bloomberg Business Week on Bloomberg Radio.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Debt and energy worries have eased. Stocks advanced with the S&P up for a third day. S&P did climb as much as 1.5% before nearly halving gains on China's plans to tighten its supervision over technology companies. The S&P up 36, up 0.8%. The Dow ahead of the jobs report tomorrow morning up 337, up by 1%. NASDAQ up 152. The NASDAQ Composite Index up today by just about 1%. 10-year yield 1.57%. Bitcoin down 1.4%, 54,192. Gold down 0.5%, 17.54 the ounce. And West Texas Intermediate crude up 1.8%, 78.79 a barrel. IBM says all of its U.S.-based employees must be vaccinated by December 8th or be put on unpaid suspension. IBM shares today did fall by 0.4%. An American Airlines Group has told its employees to get fully vaccinated by November 24th or lose their jobs. American down today by 1.8%. Recapping 10-year yield 1.57%. S&P up 0.8. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, I want to get back to Paul Pullman. Thank you, Charlie. He is a former CEO of Unilever. He was there from 2009 to 2019. His new book out, Net Positive, How Courageous Companies Thrive by Giving More Than They Take. Still with us on the phone in the UK. Paul, I want to be honest with you, and Tim and I have been talking, and people, we get a lot of feedback. This whole idea that companies that have got us into a predicament in some ways, have contributed to climate change, have helped create wealth gaps, have done a lot of things that have put us in not a great way today. How can we really rely on them to be ethical, responsible, and get us out of it?
Yeah, I don't disagree with that statement, and we have that same skepticism. Obviously, a lot of these issues that we now deal with have crept up on us, and our incredible wealth creation and lifting so many people out of poverty over the last 4 or 5 decades has been incredible, and we should be rejoicing in that. Unfortunately, though, we've done that in a linear production pattern that is giving us enormous pressures on the planetary boundaries. This year, World Overshoot Day was July 29th, which is the day that we use up more resources than the world can replenish. In fact, after that day, we're stealing from future generations. Now, increasingly, businesses are starting to understand that that is an unsustainable way of running businesses. The financial market sees it as an increasing risk. The employees that work for the companies want to live in a better world. The citizens are speaking up. So I think there's a groundswell of action. It happens to be, fortunately still, that in today's world, the business community is held at a higher level of trust than governments. And whilst we, in our book, deliberately don't want to get into finger pointing, we say the first thing that businesses have to do is to own the problem. If you break it, you own it, is what we call it. Just like happens in a store when you break a cup of that you didn't buy or whatever. So businesses need to go look at their total impact and take responsibility for that. And that takes leadership, that takes courage. And then they look at the negative consequences of some of their business models and try to work very hard, first alone, then in their value chain, then at industry level, or finally at societal level to drive the needed changes. And that is starting to happen. You look at climate, I think it's now undeniable that we have an issue of climate change, but it's also clear that the costs that society are incurring, $5.9 trillion, according to the IMF, are significantly higher than actually what it would cost us to attack it. And business would be the first one to realize that.
Paul, are the incentives aligned, though? Because here we're in the fourth quarter of the year, we're about to start getting earnings from companies, and the numbers that move the company's stock are revenue and bottom line forecasts and how the companies did in the previous quarter. There's nothing in there about environmental impact, and that's what investors are focused on.
Well, yes and no. What we now see in the shareholder proxy season that we just closed, that most of the questions are around ESG. You see shareholders asking Exxon to change board members. You see Chevron being attacked. You see $90 trillion of money under management now in the financial markets asking for disclosure on carbon. You see Larry Fink writing his letters, Vanguard. I think we're past that point. We also see that if companies make announcements, significant announcements to do something about it, that actually their share price gets positively affected. We've looked by industry sector, just comparing within a sector companies, and companies that more aggressively attack these externalities actually seem to get a higher market value now as well. So we would argue just the opposite, that if you want a longer-term shareholder return, short-term you can always speculate, but if you want a longer-term shareholder return, it is now better to do that in a way that also deals with the environmental and social issues that we're facing. And fortunately, more and more CEOs are understanding that. It is just that I think we don't have to spend too much time anymore on the why, which is really your question, but more on the how, and this is where they struggle.
Well, when it comes to how, you write in the book about a net positive world, right? And you talk about redefining the corporation, that the corporate world is zeroing in on better metrics with a soup of new initiatives and acronyms are popping up. And, in this section, you talk about, what would it mean if companies had to pay for the natural capital and resources that they use for free? None of the biggest industries would be profitable. And then you also ask, what would a company look like if citizens, not shareholders, were the focus? Do we need new metrics, whether it's from the SEC or European regulators or Asian regulators, in terms of what really is a successful company? And I do wonder how the capital markets, the financial markets that Tim and I report on minute by minute every day, makes it complicated and maybe impossible for new metrics to be created.
Well, there is a lot of effort going on around the globe, actually, to create these measures, because people increasingly see that these environmental issues like climate change or these social issues like resilience in your value chain or employee engagement, etc., are actually of material importance. And increasingly, the financial community is asking for it. Unfortunately, until now, we have not had governments that were, in some countries, conducive to put in that direction. And as a result, we have a little bit of an alphabet soup, as you mentioned, with about 600 different efforts to put standards out there. Fortunately, someone had thought about it. And on climate, we're increasingly rolling out the standards of financial disclosure for climate-related risks, which are called TCFD. We now have over 2,300 companies supporting that. We have about 45 countries implementing that, and that is from basically zero a year ago. We have the SEC getting increasingly interested in looking at some of these measures for materiality reasons. Europe has the European taxonomy, and last but not least, the IFRS is working quite aggressively on creating the sustainable standard board. So there are things happening on that front, and rather sooner than later.
Hey, forgive me, 30 seconds quickly. Is there a company other than Unilever that you think is getting it right with this? And just quickly, if you could.
Oh, no, there are many companies that get it right. We see now companies like Google wanting to put their system to the use of consumers and helping consumers make better choices in purchasing or in investing in companies. We see companies like Delta or other airlines now making commitments to be net zero by 2050. We see companies now trying to go to the net positive direction. Walmart restoring forests, protecting oceans, Salesforce replanting forests, Microsoft trying to capture carbon or reduce since their inception, 1975. Yeah, the train has left the station. We just need to get more companies and then have these companies work together with governments to change some of the frameworks that are out there.
Well, Paul, nice to get some time with you. Really appreciate it. Paul Polman, former Unilever CEO. His book, Net Positive, How Courageous Companies Thrive by Giving More Than They Take. A lot of problems to solve.
Yeah, a lot of problems to solve. He's optimistic, though.
Yeah, I'm going to be optimistic, too. Have a great evening, everyone.
collide in Silicon Valley and beyond. This is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, we're one step closer to a COVID vaccine for children. Pfizer and BioNTech applying for emergency approval today. Plus, IBM is taking a tougher stance on vaccine mandates, why some employees could be suspended without pay before the end of the year. Plus, the future of work is hybrid. That's the view from both Box CEO Aaron Levy and Cisco CEO Chuck Robbins. We'll have conversations with both of them this hour. And Apple's car ambitions take a turn, the company doubling down on CarPlay, which is already featured in a number of major vehicles. Now drivers will have more control options with just a touch of their iPhones. First, I want to talk about Pfizer and BioNTech submitting for emergency authorization approval for a COVID vaccine for kids today. This is a huge step forward in the vaccination campaign of millions of people around the world. Bloomberg's Kara Wetzel, our San Francisco bureau chief, joins us now. So how soon could this approval happen? How soon can kids between 5 and 12 be vaccinated?
Right, so Pfizer submitted its application for emergency use approval today. The FDA will meet later this month, followed by the CDC. And our reporting in Washington indicates that we could have shots in the arms of kids by the first week of November. So could be very soon. And that would be a major step toward getting, not just for kids, but for getting parents back to offices who might have been uncomfortable, toward travel, and really helping to jumpstart the economy for those parents who had been worried about this type of thing.
Meantime, we're seeing more companies take a stronger stance on vaccine mandates. Talk to us about what IBM just announced today. Employees could be suspended without pay before the end of the year?
Right. IBM is just, one of a growing number of companies who are now taking a harder stance on vaccine mandates. This follows President Biden's orders last month saying that he wants all employers that have 100 or more employees to either mandate vaccines or require weekly testing of employees. So for some employers, weekly testing, it's a headache trying to figure all that out, and they just want to have their employees vaccinated, and that gives them a reason to. So those rules are still being ironed out. Biden was in Illinois today met with United Airlines, which has installed such a mandate and has had about 98% of workers, more than that, vaccinated. So they're pointing to that as a real success story and something companies should be doing to increase vaccination rates for everybody.
Well, and especially with a vaccine for kids potentially coming soon, how could these new steps really reshape the way families are operating right now, the way schools are operating right now, and workplaces? Because there still has been so much uncertainty for all of them.
Right. I mean, that has been a major issue for workplaces and just the economy, is that parents, even if they are vaccinated, are still worried about going out, possibly bringing home the virus and transmitting it to their unvaccinated kids. That said, there's actually been surveys saying that it's only about a little more than 30% of parents definitely want to get their kids the shot as soon as it's available. There's a lot more people on the fence about it for kids, just having the uncertainty. It's not fully FDA approved. It won't be, this is an emergency use order. So there's still a fair number of kids, as with adults, who are going to be hesitant about this, and it's not necessarily, going to be widespread vaccinations for everybody right away.
All right, Kara Wetzel, our San Francisco bureau chief. Thank you so much, Kara, for bringing us those important updates. I want to take a quick look at the markets now. Our Gina Martin-Adams of Bloomberg Intelligence joining us now. And Gina, obviously this vaccine, vaccine for kids and these mandates are certainly having an impact on workplaces, on parents. Are we seeing this play out in the markets?
I think what we're seeing play out in the markets is more the Delta variant than we are seeing vaccines. What we did see over the course of the summer was, as infections were rising due to the Delta variant spreading, we saw a rotation into much more defensive plays in the equity markets, domestic stocks outperforming, tech and other defensive sectors outperforming. And once the rate of infection started to peak globally and trend down in early September, we've seen the reverse occur. We've seen, some cyclical sectors, maybe inflation.